Question 1. What ethical considerations should insurance agents in Wisconsin keep in mind when marketing and advertising their products? A. Providing false information about competitors to highlight the benefits of their own products. B. Offering incentives to clients for writing positive reviews about their services on social media. C. Failing to disclose potential risks associated with insurance policies. D. Using fear tactics to pressure potential clients into purchasing insurance policies. Correct answer. C. Failing to disclose potential risks associated with insurance policies. Explanation. In Wisconsin, as in many other states, insurance agents have a duty to provide clients with accurate and complete information about insurance products. This includes disclosing any potential risks associated with the policies being offered. Failure to disclose such risks can lead to serious consequences, including lawsuits and damage to the agent's reputation. Moreover, it goes against the principle of good faith and fair dealing, which is a fundamental aspect of insurance contracts. Agents should always prioritize the interests of their clients and ensure transparency in all their communications. This helps build trust and credibility, which are essential for long-term success in the insurance industry. Question 2. Sarah, an insurance agent in Wisconsin, wants to attract more clients to her agency. Which of the following marketing strategies would be considered unethical in the state? A. Offering discounts to clients who refer their friends and family to her agency. B. Making exaggerated claims about the benefits of certain insurance policies. C. Providing educational seminars to help clients understand their insurance options. D. Partnering with local businesses to offer joint promotions. Correct answer. B. Making exaggerated claims about the benefits of certain insurance policies. Explanation. In Wisconsin, insurance agents are prohibited from making false or exaggerated claims about insurance policies. This includes overstating the benefits or misrepresenting the terms and conditions of the policies. Such practices are not only unethical but also illegal under state insurance regulations. Agents have a responsibility to provide accurate and truthful information to clients, enabling them to make informed decisions about their insurance needs. Exaggerated claims can mislead consumers and undermine the integrity of the insurance industry as a whole. Therefore, agents must always ensure that their marketing materials and communications are honest, transparent, and in compliance with state laws and regulations. Question 3. John, an insurance agent in Wisconsin, is preparing an advertising campaign for his agency. Which of the following actions would be considered ethical? A. Purchasing email lists to send unsolicited promotional emails to potential clients. B. Using testimonials from satisfied clients in his advertising materials. C. Making false promises about the guaranteed returns on investment-linked insurance products. D. Creating misleading advertisements that omit important terms and conditions. Correct answer. B. Using testimonials from satisfied clients in his advertising materials. Explanation. In Wisconsin, insurance agents are permitted to use testimonials from satisfied clients in their advertising materials, provided that the testimonials are genuine and accurately represent the client's experiences. Testimonials can help build credibility and trust with potential clients, as they demonstrate the agent's track record of providing quality service. However, agents must ensure that the testimonials are used in a truthful and non-misleading manner. This means accurately portraying the benefits and limitations of the insurance products being offered. Additionally, agents should obtain written consent from clients before using their testimonials in advertising materials, in compliance with state privacy laws. By using testimonials ethically, agents can enhance their reputation and attract more clients to their agency. Question 4. Lisa, an insurance agent in Wisconsin, wants to expand her knowledge of insurance ethics and professional conduct. Which of the following topics is likely to be covered in a continuing education course on ethics for insurance agents? A. Techniques for maximizing sales commissions. B. Strategies for avoiding regulatory scrutiny. C. Ethical considerations in insurance marketing and advertising. D. Ways to exploit loopholes in insurance policies. Correct answer. C. Ethical considerations in insurance marketing and advertising. Explanation. Continuing education courses on ethics for insurance agents in Wisconsin are likely to cover topics related to ethical considerations in insurance marketing and advertising. These courses may discuss principles of honesty, transparency, and fairness in advertising practices, as well as regulations governing the marketing of insurance products. By exploring ethical dilemmas and case studies, agents can enhance their understanding of ethical standards and apply them in their professional practice. This ensures that agents maintain integrity and trustworthiness in their interactions with clients and the public. Question 5. John, an insurance agent in Wisconsin, has been offered a promotion to a managerial position within his insurance agency. What effect does John's promotion have on his licensing and continuing education requirements? A. John's licensing and continuing education requirements remain the same regardless of his new position. B. John is exempt from licensing and continuing education requirements as a manager. C. John's licensing requirements are waived, but he must still complete continuing education. D. John must obtain a new license and complete additional continuing education requirements as a manager. Correct answer. A. John's licensing and continuing education requirements remain the same regardless of his new position. Explanation. John's promotion to a managerial position within his insurance agency does not change his licensing and continuing education requirements. As an insurance agent, John is still subject to the same licensing requirements and renewal periods mandated by the Wisconsin Office of the Commissioner of Insurance, OCI. Additionally, John must continue to fulfill his continuing education obligations to maintain his license, regardless of his managerial role. This ensures that John remains knowledgeable and competent in his profession, regardless of changes in his job responsibilities. Question 6. James is a newly licensed insurance agent in Wisconsin. He wants to know how often he needs to renew his insurance license. What is the renewal period for insurance licenses in Wisconsin? A. Every 5 years. B. Every 3 years. C. Every 2 years. D. Every year. Correct answer. C. Every 2 years. Explanation. In Wisconsin, insurance licenses must be renewed every 2 years. This renewal period ensures that licensed agents stay up to date with industry standards, regulations, and best practices. To renew their licenses, agents must complete continuing education requirements and submit a renewal application to the Wisconsin Office of the Commissioner of Insurance, OCI. By renewing their licenses regularly, agents demonstrate their commitment to maintaining professionalism and staying informed about changes in the insurance landscape. Question 7. When it comes to annuity death benefits and beneficiary options in Wisconsin, which of the following statements is correct? A. Annuity death benefits are automatically paid out to the annuitant's estate upon their death. B. Annuity death benefits can only be paid out as a lump sum to the primary beneficiary. C. Annuity death benefits can be paid out to the beneficiary in various forms, including lump sum, installment payments, or as a life income. D. Annuity death benefits are taxable to the beneficiary regardless of the payout option chosen. Correct answer. C. Annuity death benefits can be paid out to the beneficiary in various forms, including lump sum, installment payments, or as a life income. Explanation. In Wisconsin, annuity death benefits offer flexibility in how they can be paid out to the beneficiary. The beneficiary typically has the option to receive the death benefit as a lump sum, in installment payments over a specified period, or as a life income, which provides regular payments for the beneficiary's lifetime. This flexibility allows beneficiaries to choose the payout option that best suits their financial needs and goals. Additionally, the taxation of annuity death benefits depends on various factors, including the type of annuity, the age of the annuitant at the time of death, and the payout option chosen. Question 8. Sarah, a resident of Wisconsin, recently inherited an annuity from her deceased relative. She wants to know if she has the option to change the beneficiary designation on the annuity. What would you advise Sarah? A. Sarah cannot change the beneficiary designation on the annuity because it is irrevocable. B. Sarah can change the beneficiary designation at any time without restrictions. C. Sarah can change the beneficiary designation only with the consent of the current beneficiary. D. Sarah can change the beneficiary designation only if the annuity contract allows for it. Correct answer. D. Sarah can change the beneficiary designation only if the annuity contract allows for it. Explanation. In Wisconsin, the ability to change the beneficiary designation on an annuity depends on the terms of the annuity contract. Some annuity contracts may allow the annuitant to change the beneficiary designation at any time, while others may have specific restrictions or requirements for making changes. It's essential for Sarah to review the terms of the annuity contract carefully to determine if she has the option to change the beneficiary designation and if there are any conditions or limitations associated with making such changes. If the annuity contract allows for it, Sarah can proceed with updating the beneficiary designation accordingly. Question 9. John, a Wisconsin resident, is considering purchasing an annuity and wants to ensure that his spouse will receive the death benefit if he passes away. Which of the following beneficiary options would provide the most protection for John's spouse? A. Naming the estate as the beneficiary of the annuity. B. Naming a charitable organization as the beneficiary of the annuity. C. Naming John's children as the beneficiaries of the annuity. D. Naming John's spouse as the primary beneficiary of the annuity with contingent beneficiaries named thereafter. Correct answer. D. Naming John's spouse as the primary beneficiary of the annuity with contingent beneficiaries named thereafter. Explanation. To provide the most protection for his spouse, John should name his spouse as the primary beneficiary of the annuity. By doing so, John ensures that his spouse will receive the death benefit directly if he passes away. Additionally, John can name contingent beneficiaries, such as his children, to receive the death benefit if his spouse predeceases him. This arrangement ensures that John's spouse is prioritized as the primary beneficiary while also providing a backup plan for the distribution of the death benefit if needed. Naming the estate, a charitable organization, or John's children as the beneficiary may not provide the same level of protection and flexibility for John's spouse. Question 10. Rachel, a Wisconsin resident, is considering taking a partial withdrawal from her annuity to purchase a new home. Which of the following statements accurately describes the tax treatment of this withdrawal? A. Partial withdrawals from an annuity are always tax-free for Wisconsin residents. B. Partial withdrawals from an annuity are subject to income tax on the portion representing earnings. C. Partial withdrawals from an annuity are tax-deductible if used to purchase a primary residence. D. Partial withdrawals from an annuity are taxed at a lower rate compared to other types of investment income. Correct answer. B. Partial withdrawals from an annuity are subject to income tax on the portion representing earnings. Explanation. When Rachel takes a partial withdrawal from her annuity to purchase a new home, the portion of the withdrawal representing earnings, interest, dividends, or capital gains is subject to income tax. This is because earnings within the annuity have not yet been taxed, and any withdrawals of earnings are treated as ordinary income in the year of withdrawal. However, Rachel's basis, the amount of her original investment, is not subject to income tax since it has already been taxed. It's important for Rachel to consider the tax implications of partial withdrawals before using her annuity funds for a major purchase like buying a new home. Question 11. John, a Wisconsin resident, is considering converting his traditional IRA into an annuity to receive guaranteed income in retirement. Which of the following statements accurately describes the tax treatment of IRA to annuity conversions? A. IRA to annuity conversions are always tax-free for Wisconsin residents. B. IRA to annuity conversions are subject to income tax on the entire converted amount. C. IRA to annuity conversions trigger a one-time capital gains tax at the federal level. D. IRA to annuity conversions are tax deductible if the annuity is purchased through a qualified employer plan. Correct answer. B. IRA to annuity conversions are subject to income tax on the entire converted amount. Explanation. When John converts his traditional IRA into an annuity, the entire converted amount is subject to income tax in the year of conversion. This includes any pre-tax contributions, earnings, and deductible contributions within the IRA. The converted amount is treated as ordinary income for tax purposes, and John must report it on his income tax return. Converting a traditional IRA into an annuity provides John with the opportunity for guaranteed income in retirement, but it's important for him to consider the tax implications before proceeding with the conversion. Question 12. Linda, a Wisconsin resident, is the beneficiary of her deceased spouse's annuity. Which of the following statements accurately describes the tax treatment of annuity death benefits received by a surviving spouse? A. Annuity death benefits received by a surviving spouse are always tax-free for Wisconsin residents. B. Annuity death benefits received by a surviving spouse are subject to income tax, but the surviving spouse can choose to defer taxation. C. Annuity death benefits received by a surviving spouse are subject to a one-time inheritance tax at the state level. D. Annuity death benefits received by a surviving spouse are tax deductible if used to pay for funeral expenses. Correct answer. A. Annuity death benefits received by a surviving spouse are always tax-free for Wisconsin residents. Explanation. In Wisconsin, annuity death benefits received by a surviving spouse are generally tax-free. This means that Linda can receive the death benefit from her deceased spouse's annuity without incurring income tax liability. The tax-free treatment applies regardless of the amount of the death benefit received and provides financial support to surviving spouses during difficult times. It's important for Linda to be aware of this tax benefit and to consult with a financial advisor to understand her options for managing the annuity death benefit. Question 13. Emily, a policyholder in Wisconsin, has a permanent life insurance policy with a cash value accumulation feature. What is one primary benefit of cash value accumulation in permanent life insurance policies? A. Cash value accumulation allows policyholders to borrow against the policy. B. Cash value accumulation guarantees a fixed rate of return on the policy. C. Cash value accumulation provides a death benefit equal to the cash value. D. Cash value accumulation exempts policyholders from paying premiums. Correct answer. A. Cash value accumulation allows policyholders to borrow against the policy. Explanation. One primary benefit of cash value accumulation in permanent life insurance policies is that it allows policyholders to borrow against the accumulated cash value. Policy loans provide policyholders with access to funds for various purposes, such as emergencies, education expenses, or retirement income, without surrendering the policy. Policy loans typically accrue interest, and any outstanding loan balance, plus accrued interest, may reduce the death benefit payable to beneficiaries upon the insured's death. It's essential for policyholders like Emily to understand the implications of borrowing against the cash value of their permanent life insurance policies before taking policy loans. Question 14. James, a resident of Wisconsin, is considering surrendering his permanent life insurance policy due to financial difficulties. What happens to the cash value of a permanent life insurance policy when the policy is surrendered? A. The cash value is forfeited to the insurance company. B. The cash value is refunded to the policyholder tax-free. C. The cash value is transferred to the policyholder's beneficiaries. D. The cash value is converted into an annuity for the policyholder. Correct answer. A. The cash value is forfeited to the insurance company. Explanation. When a policyholder surrenders a permanent life insurance policy, the cash value accumulated in the policy is forfeited to the insurance company. In return, the policyholder receives the surrender value, which is the cash value minus any surrender charges imposed by the insurance company. Surrendering a policy terminates coverage, and the policyholder no longer has access to the death benefit or any other policy benefits. It's important for policyholders like James to carefully consider the financial implications of surrendering their permanent life insurance policies, as it may result in the loss of valuable protection and future financial security. Question 15. Sarah, a policyholder in Wisconsin, has a whole life insurance policy with a cash value component. How does the cash value in a whole life insurance policy typically accumulate over time? A. The cash value grows at a variable rate based on market performance. B. The cash value remains constant throughout the life of the policy. C. The cash value grows at a guaranteed, tax-deferred rate set by the insurance company. D. The cash value decreases gradually as the policyholder ages. Correct answer: C. The cash value grows at a guaranteed, tax-deferred rate set by the insurance company. Explanation: in a whole life insurance policy, the cash value typically grows at a guaranteed, tax-deferred rate set by the insurance company. This rate is specified in the policy contract and remains consistent throughout the life of the policy, providing policyholders with predictable cash value accumulation. The cash value accumulation is tax-deferred, meaning that policyholders do not pay taxes on the growth of the cash value until they withdraw funds from the policy or surrender the policy. The guaranteed growth of cash value provides policyholders like Sarah with a stable and reliable savings component within their whole life insurance policies, offering financial security and flexibility for future needs. Question 16. Which of the following is a common risk classification category used by underwriters in Wisconsin when assessing life insurance applicants? A. Preferred Plus. B. Bronze. C. Standard CD, Subprime. Correct answer: A. Preferred Plus. Explanation: in Wisconsin, as in many other states, underwriters use risk classification categories to assess life insurance applicants. Preferred Plus is one such category, indicating individuals who present the lowest risk to insurers due to factors such as excellent health, lifestyle habits, and family medical history. Other common risk classification categories may include Preferred, Standard Plus, Standard, and Substandard or Substandard. These categories help underwriters determine the appropriate premium rates for life insurance policies based on the level of risk presented by the applicant. Options B. Bronze and C. Standard C are not commonly used risk classification categories in life insurance underwriting, while option D, Subprime, is typically associated with credit risk rather than life insurance risk assessment. Question 17. In Wisconsin, what is the purpose of the Medical Information Bureau, MIB, in the underwriting process for life and health insurance? A. To provide medical treatment to policyholders. B. To collect and share medical information among insurers. C. To conduct medical exams for insurance applicants. D. To audit insurance claims for accuracy. Correct answer: B. To collect and share medical information among insurers. Explanation: the Medical Information Bureau, MIB, is an organization used by insurers in Wisconsin and across the United States to collect and share medical information about insurance applicants. Its primary purpose is to assist insurers in underwriting life and health insurance policies by providing access to a centralized database of medical information. Insurers can use this information to verify the accuracy of applicant disclosures, identify any undisclosed medical conditions, and assess overall risk. The MIB does not provide medical treatment to policyholders, option A, conduct medical exams, option C, or audit insurance claims, option D. Its main function is to facilitate information sharing among insurers to support the underwriting process. Question 18. Which of the following is a key consideration for underwriters when assessing the risk of insuring a commercial property in Wisconsin? A. Age of the property owner. B. Property location and surroundings. C. Personal credit score of the property owner. D. Political affiliation of the property owner. Correct answer: B. Property location and surroundings. Explanation: when underwriting commercial property insurance in Wisconsin, one of the key considerations for underwriters is the property's location and surroundings. Factors such as proximity to fire stations, flood zones, crime rates, and environmental risks can significantly impact the property's risk profile and potential for losses. Underwriters assess these factors to determine appropriate coverage limits, premiums, and risk mitigation measures. While the age of the property owner, option A, and their personal credit score, option C, may be relevant for certain types of insurance, they are not primary considerations for commercial property underwriting. Additionally, the political affiliation of the property owner, option D, is not a factor in insurance underwriting. Question 19. When underwriting a life insurance policy in Wisconsin, which of the following factors is typically not considered? A. Family medical history. B. Occupation and income level. C. Credit score. D. Smoking status. Correct answer, C. Credit score. Explanation. In Wisconsin, underwriters typically consider various factors when underwriting a life insurance policy to assess the risk associated with insuring an applicant. Family medical history, occupation and income level, and smoking status are commonly evaluated as they provide insights into the applicant's health, lifestyle, and mortality risk. However, credit score is generally not a factor in life insurance underwriting as it is more relevant in other financial contexts such as lending or credit applications. Question 20. In Wisconsin, what role does underwriting play in the issuance of a health insurance policy? A. Setting the premium payment schedule. B. Determining the policy's coverage limits. C. Assessing the applicant's risk factors and health status. D. Deciding on the policy's renewal terms. Correct answer, C. Assessing the applicant's risk factors and health status. Explanation. Underwriting in Wisconsin health insurance policies involves assessing the applicant's risk factors and health status to determine the appropriate premium rates and coverage terms. This includes evaluating factors such as medical history, pre-existing conditions, and lifestyle habits to gauge the level of risk associated with insuring the applicant. While premium payment schedules, coverage limits, and renewal terms may be influenced by underwriting decisions, the primary role of underwriting is to assess risk and determine policy eligibility based on the applicant's health status. Question 21. Which of the following statements accurately describes the underwriting process for insurance policies in Wisconsin? A. Underwriters only consider the applicant's age and gender. B. Underwriters have no influence on the policy's premium rates. C. Underwriting is a standardized process with no variations between insurers. D. Underwriters use various factors to assess the applicant's risk and determine policy eligibility. Correct answer, D. Underwriters use various factors to assess the applicant's risk and determine policy eligibility. Explanation. In Wisconsin, underwriting is a comprehensive process where underwriters evaluate various factors to assess the applicant's risk and determine policy eligibility. These factors may include age, gender, health status, occupation, lifestyle habits, and medical history, among others. Underwriters play a critical role in setting appropriate premium rates and coverage terms based on the level of risk associated with insuring the applicant. Option A. Underwriters only consider the applicant's age and gender is incorrect, as underwriters assess multiple factors beyond age and gender. Option B. Underwriters have no influence on the policy's premium rates is incorrect, as underwriters directly influence premium rates based on risk assessment. Option C. Underwriting is a standardized process with no variations between insurers is incorrect, as underwriting processes may vary between insurers based on their underwriting guidelines and risk tolerance levels. Question 22. In Wisconsin, insurance agents must adhere to certain guidelines when using social media for marketing purposes. Which of the following practices would be considered unethical? A. Engaging with clients and prospects in a professional and respectful manner. B. Sharing informative articles and blog posts related to insurance topics. C. Creating fake accounts to leave positive reviews for their own agency. D. Participating in online forums to answer questions and provide expert advice. Correct answer. C. Creating fake accounts to leave positive reviews for their own agency. Explanation. Using fake accounts to leave positive reviews for one's own agency is a clear violation of ethical standards in insurance marketing. This practice is not only dishonest but also undermines the trust and credibility of the insurance industry. Wisconsin insurance agents are expected to maintain honesty and transparency in all their communications, including on social media platforms. Engaging authentically with clients and prospects, providing valuable information, and offering genuine assistance are acceptable practices. However, creating fake accounts to manipulate online reviews is deceptive and unethical. Agents should focus on building a positive reputation through genuine interactions and quality service, rather than resorting to dishonest tactics. Question 23. Mary, an insurance agent in Wisconsin, is designing a marketing campaign to target millennials. Which of the following strategies would be considered ethical? A. Using pop-up ads on websites frequented by millennials to promote her agency. B. Creating engaging and informative videos about insurance topics for social media platforms. C. Offering free gifts or incentives to millennials in exchange for signing up for insurance policies. D. Sending unsolicited text messages to millennials to promote her agency's services. Correct answer. B. Creating engaging and informative videos about insurance topics for social media platforms. Explanation. Creating engaging and informative content, such as videos about insurance topics, for social media platforms is an ethical marketing strategy for targeting millennials. Millennials are known for valuing authenticity and transparency in advertising, and providing valuable content can help build trust and credibility with this demographic. Unlike intrusive methods like pop-up ads or unsolicited text messages, creating educational content demonstrates a commitment to providing value to potential clients. By offering useful information and insights, insurance agents can attract millennials to their agency and establish meaningful connections that lead to long-term relationships. Question 24. In Wisconsin, insurance agents are required to obtain consent from clients before using their personal information for marketing purposes. Which of the following actions would violate this requirement? A. Sending promotional emails to clients who have opted in to receive marketing communications. B. Sharing clients' contact information with third-party advertisers without their consent. C. Providing clients with information about additional insurance products that may be of interest to them. D. Including clients' testimonials in advertising materials without their explicit permission. Correct answer. B. Sharing clients' contact information with third-party advertisers without their consent. Explanation. In Wisconsin, insurance agents are prohibited from sharing clients' personal information with third-party advertisers without their explicit consent. This requirement is outlined in state privacy laws and regulations designed to protect consumers' privacy rights. Agents must obtain clients' consent before using their personal information for marketing purposes, including sharing it with third parties. Failure to obtain consent before sharing clients' contact information can result in serious legal and ethical consequences, including fines and damage to the agent's reputation. Therefore, agents must always respect clients' privacy rights and obtain permission before disclosing their personal information to third parties. Question 25. In Wisconsin, insurance rates and forms are subject to regulation to ensure fairness and transparency in the insurance market. Which of the following statements regarding the regulation of insurance rates and forms is correct? A. Insurance companies can set their own rates and create their own policy forms without regulatory oversight. B. Insurance rates and forms must be filed with and approved by the Wisconsin Office of the Commissioner of Insurance, OCI. C. Insurance companies are only required to disclose their rates and forms to policyholders upon request. D. Insurance rates and forms are regulated by the federal government, not the state of Wisconsin. Correct answer. B. Insurance rates and forms must be filed with and approved by the Wisconsin Office of the Commissioner of Insurance, OCI. Explanation. In Wisconsin, insurance rates and forms must be filed with and approved by the OCI before they can be used in the market. This regulatory oversight ensures that insurance rates are fair and not discriminatory, and that policy forms provide adequate coverage and comply with state laws and regulations. By requiring approval from the OCI, Wisconsin aims to protect consumers from unfair practices and ensure the stability and integrity of the insurance market. Question 26. Sarah is an insurance agent in Wisconsin who wants to introduce a new insurance policy to her clients. What should Sarah do before offering the policy to her clients? A. Begin selling the policy immediately to generate interest among clients. B. Notify her clients about the new policy and encourage them to purchase it. C. Obtain approval from the Wisconsin Office of the Commissioner of Insurance, OCI, for the policy's rates and forms. D. Offer the policy to clients without disclosing its terms and conditions. Correct answer. C. Obtain approval from the Wisconsin Office of the Commissioner of Insurance, OCI, for the policy's rates and forms. Explanation. Before offering a new insurance policy to clients in Wisconsin, Sarah must ensure that the policy's rates and forms are approved by the OCI. This regulatory requirement ensures that the policy meets state standards for fairness, adequacy of coverage, and compliance with relevant laws and regulations. Failing to obtain approval from the OCI before selling the policy could result in legal consequences for Sarah and her insurance company. Question 27. John, an insurance underwriter in Wisconsin, is reviewing rates for a new health insurance product. Which of the following factors should John consider when determining the appropriateness of the rates? A. The profitability of the insurance company. B. The competitiveness of the rates compared to other insurance companies. C. The actuarial soundness of the rates based on risk and loss data. D. The preferences of the insurance agents selling the product. Correct answer. C. The actuarial soundness of the rates based on risk and loss data. Explanation. In Wisconsin, insurance rates must be actuarially sound, meaning they are based on credible risk and loss data. As an insurance underwriter, John should evaluate the rates to ensure they accurately reflect the level of risk associated with the insurance product. This helps maintain the financial stability of the insurance company and ensures that policyholders are charged fair and adequate premiums based on their risk profile. Considering factors such as profitability, competitiveness, and agent preferences may influence business decisions but are not directly related to the regulatory requirement of actuarial soundness. Question 28. Mary, an insurance agent in Wisconsin, wants to expand her product offerings to include health insurance policies. What is the first step Mary should take to obtain the necessary license for selling health insurance? A. Mary should contact the Wisconsin Department of Revenue to inquire about licensing requirements. B. Mary should complete a pre-licensing education course specifically for health insurance. C. Mary should submit an application to the Wisconsin Office of the Commissioner of Insurance, OCI, for a health insurance license. D. Mary should join a professional association for insurance agents to gain access to health insurance licensing resources. Correct answer. B. Mary should complete a pre-licensing education course specifically for health insurance. Explanation. Before selling health insurance policies in Wisconsin, Mary must obtain a health insurance license. The first step in this process is to complete a pre-licensing education course that focuses specifically on health insurance. This course provides Mary with essential knowledge about health insurance products, regulations, and ethical standards. Upon completing the pre-licensing education course, Mary can then proceed to submit an application to the Wisconsin Office of the Commissioner of Insurance, OCI, for her health insurance license. This ensures that Mary meets the necessary educational requirements and is properly equipped to serve clients in the health insurance market. Question 29. David, an insurance agent in Wisconsin, has been licensed for several years and is approaching his license renewal deadline. What is the purpose of continuing education requirements for licensed agents like David? A. Continuing education requirements ensure that agents pay ongoing fees to maintain their licenses. B. Continuing education allows agents to specialize in specific areas of insurance without obtaining additional licenses. C. Continuing education ensures that agents stay informed about changes in insurance laws, regulations, and industry practices. D. Continuing education requirements serve as a barrier to entry for new agents seeking to enter the insurance industry. Correct answer. C. Continuing education ensures that agents stay informed about changes in insurance laws, regulations, and industry practices. Explanation. Continuing education requirements for licensed agents in Wisconsin serve to ensure that agents stay informed about changes in insurance laws, regulations, and industry practices. By participating in continuing education courses, agents like David can stay updated on emerging trends, new products, and evolving regulatory requirements. This ongoing training helps agents maintain their knowledge and skills, uphold ethical standards, and better serve their clients. Additionally, staying informed about changes in the insurance landscape allows agents to adapt to market dynamics and remain competitive in their field. Question 30. Sarah, a licensed insurance agent in Wisconsin, is interested in expanding her knowledge of insurance laws and regulations. Which of the following resources is most likely to provide Sarah with relevant and up-to-date information? A. Social media platforms where insurance professionals share informal tips and advice. B. Online forums where consumers discuss their experiences with insurance companies. C. The website of the Wisconsin Office of the Commissioner of Insurance, OCI. D. Insurance company brochures and marketing materials. Correct answer. C. The website of the Wisconsin Office of the Commissioner of Insurance, OCI. Explanation. The website of the Wisconsin Office of the Commissioner of Insurance, OCI, is the most reliable and authoritative source of information regarding insurance laws, regulations, and licensing requirements in Wisconsin. This official website provides agents like Sarah with access to comprehensive resources, including state statutes, administrative rules, licensing information, and educational materials. By consulting the OCI website, Sarah can stay informed about changes in insurance regulations, licensing procedures, and continuing education requirements. This ensures that Sarah has access to accurate and up-to-date information to support her professional development and compliance with regulatory requirements. Question 31. Julia, a Wisconsin resident, is considering purchasing an immediate annuity with a single premium payment. Which of the following statements accurately describes an immediate annuity? A. Immediate annuities allow annuitants to defer receiving payments until a later date. B. Immediate annuities provide guaranteed minimum interest rates for a specified period. C. Immediate annuities offer fixed payments for a predetermined number of years. D. Immediate annuities begin providing payments shortly after the premium payment. Correct answer. D. Immediate annuities begin providing payments shortly after the premium payment. Explanation. Immediate annuities start providing payments shortly after the annuitant makes the premium payment. This means that Julia would start receiving income from the annuity almost immediately, typically within 1 month to 1 year after the premium payment, depending on the terms of the annuity contract. Immediate annuities are suitable for individuals seeking to convert a lump sum of money into a steady stream of income right away, such as retirees looking to supplement their retirement income. Julia should consider her income needs and timing preferences before purchasing an immediate annuity. Question 32. Daniel, a resident of Wisconsin, is considering purchasing a deferred income annuity, DIA. Which of the following statements accurately describes a deferred income annuity? A. Deferred income annuities provide payments immediately after the premium payment. B. Deferred income annuities offer fixed payments for a predetermined number of years. C. Deferred income annuities allow annuitants to choose their own investment options. D. Deferred income annuities begin providing payments at a future date chosen by the annuitant. Correct answer. D. Deferred income annuities begin providing payments at a future date chosen by the annuitant. Explanation. Deferred income annuities, DIAs, start providing payments at a future date chosen by the annuitant, typically at a specified retirement age or a predetermined number of years after the premium payment. During the deferral period, the annuity accumulates value and may offer the potential for growth, depending on the terms of the annuity contract. DIAs are designed to provide a guaranteed stream of income in retirement, offering annuitants financial security and peace of mind. Daniel should carefully consider his retirement goals and timeline when evaluating deferred income annuities. Question 33. Sophia, a Wisconsin resident, is considering purchasing a qualified longevity annuity contract, QLAC, for her retirement plan. Which of the following statements accurately describes a QLAC? A. QLACs offer immediate access to annuity funds without any surrender charges. B. QLACs provide fixed payments for a predetermined number of years. C. QLACs allow annuitants to choose their own investment options. D. QLACs begin providing payments at a specified future date, typically at an advanced age. Correct answer. D. QLACs begin providing payments at a specified future date, typically at an advanced age. Explanation. Qualified longevity annuity contracts, QLACs, begin providing payments at a specified future date, typically at an advanced age chosen by the annuitant, such as age 80 or 85. QLACs are designed to address the risk of outliving one's assets by providing a guaranteed stream of income later in life. One significant feature of QLACs is their ability to be held within qualified retirement accounts, such as IRAs and 401k plans, allowing retirees to use a portion of their retirement savings to secure lifetime income. Sophia should consider her longevity expectations and retirement income needs when evaluating QLACs as a retirement planning tool. Question 34. Sophia is interested in purchasing a term life insurance policy in Wisconsin. What is a key characteristic of term life insurance policies? A. Term life insurance policies provide coverage for the entire lifetime of the insured. B. Term life insurance policies accumulate cash value over time, similar to permanent life insurance. C. Premiums for term life insurance policies remain level throughout the policy term. D. Term life insurance policies offer a death benefit that increases over time. Correct answer. C. Premiums for term life insurance policies remain level throughout the policy term. Explanation. One key characteristic of term life insurance is that premiums remain level for the duration of the policy term. Term life insurance provides coverage for a specific period, such as 10, 20, or 30 years, and pays a death benefit to the beneficiary if the insured passes away during the term. Unlike permanent life insurance policies, which may have fluctuating premiums or accumulate cash value, term life insurance offers straightforward coverage with fixed premiums for the selected term. This feature makes term life insurance an affordable option for individuals seeking temporary coverage to protect against financial obligations such as mortgages, debts, or income replacement during specific life stages. Question 35. In Wisconsin, which of the following factors is not typically considered by underwriters during the underwriting process for life insurance policies? A. Age and gender of the applicant. B. Smoking status and overall health condition. C. Occupation and income level. D. Marital status and number of children. Correct answer. D. Marital status and number of children. Explanation. During the underwriting process for life insurance policies in Wisconsin, underwriters assess various factors to determine the risk associated with insuring the applicant. Factors such as age and gender, option A, smoking status and overall health condition, option B, and occupation and income level, option C, are commonly considered as they provide insights into the applicant's life expectancy and potential risks. However, marital status and the number of children, option D, are typically not directly related to life insurance risk assessment and are therefore not commonly evaluated by underwriters during the underwriting process. Question 36. Which of the following is a primary goal of the underwriting process for health insurance policies in Wisconsin? A. Maximizing the insurer's profits. B. Identifying and minimizing adverse selection. C. Expediting the policy issuance process. D. Providing comprehensive coverage to all applicants. Correct answer. B. Identifying and minimizing adverse selection. Explanation. In Wisconsin, as in other states, one of the primary goals of the underwriting process for health insurance policies is to identify and minimize adverse selection. Adverse selection occurs when individuals with higher than average risk are more likely to purchase insurance, leading to increased claims costs for insurers. Through underwriting, insurers assess the health risks of applicants to ensure that premiums are appropriately priced based on the level of risk presented. Options A. Maximizing the insurer's profits, and C. Expediting the policy issuance process may be secondary considerations but are not the primary goals of underwriting. Option D. Providing comprehensive coverage to all applicants is a noble objective but may not always align with the risk management goals of insurers. Question 37. Which of the following statements regarding the underwriting process for insurance policies in Wisconsin is true? A. Underwriters solely rely on self-reported information provided by applicants. B. Underwriting decisions are standardized and do not vary among insurers. C. Underwriters may request additional medical information or exams from applicants. D. Underwriting is not applicable to group insurance policies. Correct answer. C. Underwriters may request additional medical information or exams from applicants. Explanation. In Wisconsin, underwriters play a critical role in assessing the risk associated with insurance applicants. They may request additional medical information or exams from applicants to gather comprehensive data for risk assessment. This process helps insurers make informed underwriting decisions and ensures that policies are appropriately priced based on the level of risk. Options A. Underwriters solely rely on self-reported information provided by applicants, and B. Underwriting decisions are standardized and do not vary among insurers are incorrect, as underwriters use various sources of information and apply individualized assessment criteria. Option D. Underwriting is not applicable to group insurance policies is also incorrect, as underwriting may still be conducted for group insurance to determine factors such as group demographics and claims history. Question 38. David, an insurance agent in Wisconsin, is considering using social media influencers to promote his agency's services. Which of the following considerations should David keep in mind to ensure ethical marketing practices? A. Disclosing the nature of the relationship between the influencer and the agency in all promotional posts. B. Encouraging influencers to make exaggerated claims about the benefits of the agency's services. C. Paying influencers based on the number of clients they refer to the agency. D. Instructing influencers to hide any negative feedback or reviews about the agency. Correct answer. A. Disclosing the nature of the relationship between the influencer and the agency in all promotional posts. Explanation. In Wisconsin, as in many other states, transparency is key when using social media influencers for marketing purposes. It is essential for David to disclose the nature of the relationship between the influencer and the agency in all promotional posts to ensure ethical marketing practices. Failure to disclose this information could mislead consumers and violate state regulations governing advertising and marketing. By being transparent about the relationship, David can maintain the trust and credibility of his agency while adhering to ethical standards in insurance marketing. Question 39. Sophia, an insurance agent in Wisconsin, wants to advertise her agency's services on her personal social media accounts. Which of the following actions would be considered ethical? A. Sharing clients' personal stories without their permission to demonstrate the benefits of her agency's services. B. Using deceptive language to make insurance policies seem more attractive to her social media followers. C. Offering exclusive discounts to social media followers who sign up for insurance policies. D. Engaging in respectful and professional interactions with followers who have questions about insurance. Correct answer. D. Engaging in respectful and professional interactions with followers who have questions about insurance. Explanation. In Wisconsin, insurance agents must conduct themselves ethically when using social media for marketing purposes. Engaging in respectful and professional interactions with followers who have questions about insurance is an ethical practice that demonstrates a commitment to customer service and transparency. Providing accurate information and addressing followers' concerns can help build trust and credibility with potential clients. On the other hand, sharing clients' personal stories without their permission or using deceptive language would be unethical and could damage Sophia's reputation and her agency's credibility. Therefore, agents should always prioritize honesty, integrity, and professionalism in their interactions on social media. Question 40. Mark, an insurance agent in Wisconsin, is planning an advertising campaign for his agency's new life insurance products. Which of the following statements would be considered ethical in the campaign? A. Our life insurance policies guarantee a 100% return on investment within the first year. B. Our life insurance policies offer competitive rates compared to other insurance companies in the market. C. Our life insurance policies provide coverage for all pre-existing medical conditions without any additional cost. D. Our life insurance policies are endorsed by a famous celebrity, proving their reliability and quality. Correct answer. B. Our life insurance policies offer competitive rates compared to other insurance companies in the market. Explanation. In Wisconsin, insurance agents must adhere to ethical standards when advertising insurance products. Making truthful and non-misleading statements is essential to maintain the trust and confidence of consumers. While statements like options A, C, and D may seem appealing, they could potentially mislead consumers and violate state regulations. For instance, guaranteeing a 100% return on investment within the first year or providing coverage for all pre-existing medical conditions without additional cost may be unrealistic or misleading. Similarly, using a celebrity endorsement without proper disclosure could deceive consumers about the reliability of the insurance products. Option B, on the other hand, makes a factual statement about the competitive rates of the agency's life insurance policies compared to other companies in the market, which is both truthful and ethical. Question 41. In Wisconsin, insurance companies are required to follow ethical guidelines in underwriting and claims handling. Which of the following actions by an insurance company would be considered unethical? A. Denying a claim based on legitimate policy exclusions and limitations. B. Offering incentives to underwriters for approving more policies, regardless of risk. C. Delaying claim processing to discourage policyholders from pursuing their claims. D. Providing clear and transparent policy documents to policyholders. Correct answer. C. Delaying claim processing to discourage policyholders from pursuing their claims. Explanation. In Wisconsin, insurance companies have a duty to handle claims in good faith and in a timely manner. Deliberately delaying claim processing to discourage policyholders from pursuing their claims is considered unethical and may be in violation of state insurance regulations. Policyholders rely on insurance companies to fulfill their contractual obligations promptly, especially during times of need. Delaying claim processing can cause financial hardship and emotional distress to policyholders, undermining the trust and confidence in the insurance industry. Insurance companies should prioritize fair and efficient claims handling practices to ensure that policyholders receive the benefits they are entitled to under their insurance policies. Question 42. As an underwriter in Wisconsin, what ethical considerations should you keep in mind when assessing insurance applications? A. Making decisions based solely on the applicant's age, gender, or race. B. Ensuring consistency and fairness in underwriting decisions for all applicants. C. Offering preferential treatment to applicants who are friends or relatives of company employees. D. Rejecting applications without providing a clear explanation to the applicants. Correct answer. B. Ensuring consistency and fairness in underwriting decisions for all applicants. Explanation. In Wisconsin, underwriters have a responsibility to ensure consistency and fairness in their underwriting decisions for all applicants. This means assessing each application objectively based on relevant factors such as the applicant's medical history, occupation, and lifestyle, rather than discriminatory criteria such as age, gender, or race. By maintaining consistency and fairness, underwriters can uphold the principles of equality and non-discrimination in insurance underwriting, which are essential for promoting consumer trust and confidence. Additionally, providing clear explanations for underwriting decisions helps applicants understand the reasons behind their application outcomes, fostering transparency and accountability in the underwriting process. Question 43. Sarah, an insurance claims adjuster in Wisconsin, is handling a complex claim involving multiple parties. Which of the following actions by Sarah would be considered unethical? A. Conducting a thorough investigation to gather all relevant evidence before making a claim decision. B. Providing clear and transparent communication to all parties involved in the claim. C. Accepting bribes or kickbacks from third parties in exchange for favoring their claim. D. Offering fair and reasonable settlements to claimants based on the terms of their insurance policies. Correct answer. C. Accepting bribes or kickbacks from third parties in exchange for favoring their claim. Explanation. In Wisconsin, insurance claims adjusters are required to act with honesty, integrity, and impartiality when handling insurance claims. Accepting bribes or kickbacks from third parties in exchange for favoring their claim is a clear violation of ethical standards and may constitute insurance fraud. It undermines the integrity of the claims handling process and erodes trust in the insurance industry. Claims adjusters have a duty to evaluate claims objectively and make fair and impartial decisions based on the terms and conditions of the insurance policies involved. Any attempt to manipulate the claims process for personal gain is unethical and may result in severe legal and professional consequences, including termination of employment and criminal prosecution. Therefore, claims adjusters must always prioritize ethical conduct and integrity in their dealings with all parties involved in the claims process. Question 44. In Wisconsin, insurance professionals are held to high standards of ethics and professional conduct. Which of the following actions by an insurance agent would be considered unethical? A. Disclosing confidential client information to third parties without permission. B. Providing accurate and transparent information about insurance products to clients. C. Offering incentives to clients for referring their friends and family to the agency. D. Keeping detailed records of client interactions and transactions for regulatory compliance. Correct answer. A. Disclosing confidential client information to third parties without permission. Explanation. In Wisconsin, insurance professionals are required to safeguard the confidentiality of client information at all times. Disclosing confidential client information to third parties without permission violates the client's privacy rights and constitutes a breach of trust. Insurance agents have a duty to protect the privacy and confidentiality of their clients' personal and financial information, in compliance with state and federal privacy laws. Failure to uphold these ethical standards can result in severe consequences, including legal penalties and damage to the agent's reputation. Therefore, insurance professionals must always prioritize the confidentiality and privacy of client information in their dealings. Question 45. Sarah, an insurance agent in Wisconsin, is preparing to recommend an insurance product to a client. Which of the following considerations should Sarah keep in mind to ensure ethical conduct? A. Steering the client towards the insurance product with the highest commission rate. B. Conducting a thorough needs analysis to determine the client's insurance needs and financial situation. C. Providing biased information to the client to persuade them to purchase a specific insurance product. D. Failing to disclose potential risks or limitations associated with the recommended insurance product. Correct answer. B. Conducting a thorough needs analysis to determine the client's insurance needs and financial situation. Explanation. In Wisconsin, insurance agents have a duty to act in the best interests of their clients and provide suitable recommendations based on the client's individual needs and financial situation. Conducting a thorough needs analysis allows the agent to understand the client's insurance needs, risk tolerance, and financial goals, enabling them to recommend appropriate insurance products. Steering clients towards products with the highest commission rates or providing biased information to persuade them to purchase specific products would be considered unethical and may violate state insurance regulations. Agents must prioritize transparency, honesty, and integrity in their interactions with clients to ensure ethical conduct and maintain trust and credibility in the insurance industry. Question 46. John, an insurance broker in Wisconsin, is handling a dispute between a client and an insurance company regarding a denied claim. Which of the following actions by John would be considered ethical? A. Advocating for the client's interests and negotiating a fair settlement with the insurance company. B. Misrepresenting the facts of the case to favor the insurance company's position. C. Advising the client to file a frivolous lawsuit against the insurance company for financial gain. D. Refusing to provide assistance to the client and dismissing their concerns without investigation. Correct answer: A. Advocating for the client's interests and negotiating a fair settlement with the insurance company. Explanation: in Wisconsin, insurance brokers have a fiduciary duty to act in the best interests of their clients and advocate for their interests in disputes with insurance companies. Advocating for the client's interests and negotiating a fair settlement with the insurance company demonstrates ethical conduct and adherence to professional standards. Misrepresenting facts, advising clients to file frivolous lawsuits, or refusing to provide assistance would be considered unethical and may result in legal and professional consequences. Insurance brokers must prioritize transparency, fairness, and integrity in their interactions with clients and insurance companies to ensure ethical conduct and maintain trust and credibility in the insurance industry. Question 47. David, an insurance underwriter in Wisconsin, is tasked with setting rates for a new auto insurance product. Which of the following factors should David consider when determining the appropriateness of the rates? A. The projected profitability of the insurance company. B. The personal preferences of individual policyholders. C. Actuarial principles based on risk and loss data. D. The recommendations of insurance agents selling the product. Correct answer: C. Actuarial principles based on risk and loss data. Explanation: as an insurance underwriter, David should base his rate-setting decisions on actuarial principles, which involve analyzing risk and loss data to determine appropriate premiums. Actuarial science uses mathematical and statistical methods to assess risk and calculate rates that accurately reflect the likelihood of claims occurring. By considering factors such as historical loss experience, demographic trends, and market conditions, David can ensure that the rates for the auto insurance product are fair, adequate, and actuarially sound. This approach helps maintain the financial stability of the insurance company and ensures that policyholders are charged premiums that align with their level of risk exposure. Question 48. In Wisconsin, insurance rates are regulated to ensure fairness and affordability for consumers. Which of the following statements accurately describes the role of the Office of the Commissioner of Insurance, OCI, in rate regulation? A. The OCI sets insurance rates for all insurance companies operating in Wisconsin. B. The OCI reviews and approves insurance rates filed by insurance companies to ensure they are fair and compliant with state regulations. C. The OCI has no authority over insurance rates and allows insurance companies to set their own rates without oversight. D. The OCI only regulates insurance rates for certain types of insurance, such as health insurance, but not for others. Correct answer: B. The OCI reviews and approves insurance rates filed by insurance companies to ensure they are fair and compliant with state regulations. Explanation: the Office of the Commissioner of Insurance, OCI, in Wisconsin plays a critical role in rate regulation by reviewing and approving insurance rates filed by insurance companies. This regulatory oversight ensures that insurance rates are fair, reasonable, and compliant with state laws and regulations. By reviewing rate filings, the OCI protects consumers from unfair pricing practices and ensures that insurance companies operate within the boundaries of the law. This regulatory framework promotes transparency and accountability in the insurance market, contributing to consumer trust and confidence in insurance products. Question 49. Sarah is an insurance agent in Wisconsin who wants to offer a new life insurance policy to her clients. What regulatory requirement must Sarah comply with before she can start selling the new policy? A. Sarah must obtain approval from the Wisconsin Department of Revenue for the new policy. B. Sarah must ensure that the new policy complies with federal tax laws related to life insurance products. C. Sarah must file the new policy form with the Wisconsin Office of the Commissioner of Insurance, OCI, for approval. D. Sarah must advertise the new policy to potential clients before offering it for sale. Correct answer. C. Sarah must file the new policy form with the Wisconsin Office of the Commissioner of Insurance, OCI, for approval. Explanation. Before Sarah can offer a new life insurance policy to her clients in Wisconsin, she must ensure that the policy form has been filed with and approved by the Office of the Commissioner of Insurance, OCI. This regulatory requirement ensures that the policy form meets state standards for fairness, adequacy of coverage, and compliance with insurance laws and regulations. Failing to obtain approval from the OCI before selling the policy could result in legal consequences for Sarah and her insurance company. Therefore, Sarah must prioritize compliance with regulatory requirements to protect her clients and maintain her professional reputation. Question 50. Sarah, a resident of Wisconsin, is considering purchasing an annuity to supplement her retirement income. Which of the following statements accurately describes the tax treatment of annuity distributions? A. Annuity distributions are always tax-free for Wisconsin residents. B. Annuity distributions are subject to income tax on the portion representing earnings. C. Annuity distributions are tax-deductible if used for qualified medical expenses. D. Annuity distributions are taxed at a lower rate compared to other types of investment income. Correct answer. B. Annuity distributions are subject to income tax on the portion representing earnings. Explanation. When Sarah receives distributions from her annuity, the portion of the distribution representing earnings, interest, dividends, or capital gains is subject to income tax. This is because annuities grow tax-deferred, meaning that any earnings within the annuity are not taxed until they are withdrawn. Therefore, when Sarah receives distributions, the earnings portion is treated as ordinary income and taxed at her applicable income tax rate. The portion of the distribution representing a return of Sarah's original investment basis is not subject to income tax since it has already been taxed. It's essential for Sarah to consider the tax implications of annuity distributions before making a purchase decision. Question 51. John, a Wisconsin resident, is considering the purchase of a deferred annuity. Which of the following statements accurately describes the tax treatment of a deferred annuity? A. Deferred annuities are always tax-deductible for Wisconsin residents. B. Deferred annuities grow tax-deferred until withdrawals are made. C. Deferred annuities are taxed at a lower rate compared to immediate annuities. D. Deferred annuities provide tax-free withdrawals regardless of the annuitant's age. Correct answer. B. Deferred annuities grow tax-deferred until withdrawals are made. Explanation. Deferred annuities grow tax-deferred, meaning that any earnings within the annuity accumulate on a tax-deferred basis until withdrawals are made. This allows the annuity to grow faster than a taxable investment since taxes on earnings are deferred until the annuitant begins receiving distributions. However, when withdrawals are made from a deferred annuity, the earnings portion of the distribution is subject to income tax at the annuitant's applicable income tax rate. Deferred annuities offer a tax-efficient way to save for retirement and provide income in the future. Question 52. Emma, a Wisconsin resident, is considering purchasing an immediate annuity with a lump sum payment. Which of the following statements accurately describes the tax treatment of immediate annuity payments? A. Immediate annuity payments are always tax-free for Wisconsin residents. B. Immediate annuity payments are subject to income tax on the portion representing earnings. C. Immediate annuity payments are tax-deductible if used to purchase long-term care insurance. D. Immediate annuity payments are taxed at a lower rate compared to Social Security benefits. Correct answer. B. Immediate annuity payments are subject to income tax on the portion representing earnings. Explanation. When Emma receives payments from an immediate annuity, the portion of each payment representing earnings, interest or investment gains, is subject to income tax. This is because immediate annuities are funded with after-tax dollars, and any earnings within the annuity are taxable when received as income. The portion of each annuity payment representing a return of Emma's original investment basis is not subject to income tax since it has already been taxed. Emma should be aware of the tax implications of immediate annuity payments when planning her retirement income strategy. Question 53. Emma, a resident of Wisconsin, is considering surrendering her variable life insurance policy. What is a distinguishing feature of the cash value in a variable life insurance policy? A. The cash value is guaranteed to increase over time. B. The cash value is tied to the performance of investment subaccounts. C. The cash value is independent of the policy's investment performance. D. The cash value is determined solely by the policy's death benefit. Correct answer. B. The cash value is tied to the performance of investment subaccounts. Explanation. In a variable life insurance policy, the cash value is tied to the performance of investment subaccounts chosen by the policyholder. These subaccounts function similarly to mutual funds and may invest in a variety of asset classes such as stocks, bonds, or money market instruments. The cash value fluctuates based on the performance of these underlying investments, and policyholders assume the investment risk. While variable life policies offer the potential for higher cash value growth, they also carry greater investment risk compared to other types of permanent life insurance. Emma should carefully assess her risk tolerance and investment objectives before making any decisions regarding her variable life insurance policy. Question 54. Olivia, a policyholder in Wisconsin, is considering taking a policy loan against her indexed universal life insurance policy. What distinguishes the cash value accumulation in an indexed universal life insurance policy? A. The cash value is tied to the insurer's general account investments. B. The cash value earns interest based on a fixed rate determined by the insurer. C. The cash value is linked to the performance of a stock market index. D. The cash value is unaffected by changes in interest rates. Correct answer. C. The cash value is linked to the performance of a stock market index. Explanation. In an indexed universal life insurance policy, the cash value accumulation is tied to the performance of a specified stock market index, such as the S&P 500 or the Dow Jones Industrial Average. The insurer credits interest to the cash value based on the positive performance of the index, subject to certain limitations and participation rates outlined in the policy contract. While indexed universal life policies offer the potential for higher cash value growth based on favorable market performance, they typically include downside protection mechanisms to limit losses during market downturns. Olivia should review the indexing strategy and caps or floors associated with her indexed universal life policy before considering a policy loan. Question 55. Sophia, a policyholder in Wisconsin, is interested in the cash value accumulation feature of her whole life insurance policy. What happens to the cash value when premiums are paid into a whole life policy? A. The cash value decreases proportionally to the premium payments. B. The cash value remains constant regardless of premium payments. C. The cash value increases over time as premiums are paid. D. The cash value is determined solely by the policy's death benefit. Correct answer. C. The cash value increases over time as premiums are paid. Explanation. In a whole life insurance policy, the cash value increases over time as premiums are paid into the policy. A portion of each premium payment is allocated to the cash value component of the policy, where it earns interest and accumulates tax deferred. Over the years, the cash value grows, providing policyholders with a savings component that can be accessed through policy loans or withdrawals. The cash value serves as a source of liquidity and may enhance the policy's overall value over time. Sophia should continue to make timely premium payments to maximize the growth of her policy's cash value. Question 56. When assessing risk in underwriting for life and health insurance policies in Wisconsin, which of the following factors is not typically considered? A. Medical history and current health status of the applicant. B. Occupation and job-related risks. C. Credit score and financial stability of the applicant. D. Family medical history and genetic predispositions. Correct answer. C. Credit score and financial stability of the applicant. Explanation. In Wisconsin, as in most states, credit score and financial stability are generally not considered when assessing risk in underwriting for life and health insurance policies. Instead, underwriters primarily focus on factors such as the applicant's medical history, current health status, occupation, and family medical history. These factors help underwriters evaluate the likelihood of future claims and determine appropriate premiums for the policy. While credit score and financial stability may be considered for other types of insurance, such as property and casualty insurance, they are typically not relevant in life and health insurance underwriting. Question 57. Amanda is applying for a life insurance policy in Wisconsin. She is a professional skydiver and engages in high-risk activities regularly. How might her occupation affect the underwriting process? A. Amanda's occupation may lead to higher premiums due to the increased risk of injury or death. B. Amanda's occupation will not impact the underwriting process for a life insurance policy. C. Amanda's occupation may result in denial of coverage due to the extreme risk involved. D. Amanda's occupation will only impact the underwriting process if she fails to disclose it on her application. Correct answer. A. Amanda's occupation may lead to higher premiums due to the increased risk of injury or death. Explanation. Occupation plays a significant role in the underwriting process for life insurance policies in Wisconsin. Individuals engaged in high-risk occupations, such as professional skydiving, may face higher premiums due to the increased likelihood of injury or death associated with their work. Underwriters assess occupational risk to determine appropriate premiums and coverage limits based on the potential for claims. While Amanda's occupation may result in higher premiums, it is unlikely to lead to denial of coverage as long as she accurately discloses her occupation and other relevant information on her application. Question 58. Tyler is applying for health insurance in Wisconsin and undergoes a medical exam as part of the underwriting process. During the exam, it is discovered that Tyler has a family history of heart disease. How might this information impact his application? A. Tyler's application will likely be denied due to the family history of heart disease. B. Tyler's premiums may be higher to account for the increased risk of heart-related conditions. C. Tyler's family history of heart disease will not impact his health insurance application. D. Tyler may be required to undergo additional medical tests before a decision is made on his application. Correct answer. B. Tyler's premiums may be higher to account for the increased risk of heart-related conditions. Explanation. Family medical history, such as a history of heart disease, is a significant factor in the underwriting process for health insurance policies in Wisconsin. While Tyler's application is unlikely to be denied solely based on family history, his premiums may be higher to reflect the increased risk of heart-related conditions associated with his genetic predisposition. Underwriters use this information to assess Tyler's overall health risk and determine appropriate premiums for his coverage. Additionally, Tyler may be asked to provide more detailed information or undergo additional medical tests to further evaluate his health status before a final decision is made on his application. Question 59. As an insurance underwriter in Wisconsin, you receive an application from an applicant with a pre-existing medical condition. Which of the following actions would be considered ethical? A. Denying coverage to the applicant based solely on their pre-existing medical condition. B. Increasing the premium for the applicant to offset the potential risk associated with their condition. C. Requesting additional medical information from the applicant to better assess their risk profile. D. Automatically approving the application without further evaluation due to time constraints. Correct answer. C. Requesting additional medical information from the applicant to better assess their risk profile. Explanation. In Wisconsin, insurance underwriters have a duty to assess each applicant's risk profile accurately and fairly. When an applicant has a pre-existing medical condition, it is ethical for the underwriter to request additional medical information to better understand the applicant's health status and assess their risk accurately. This allows the underwriter to make an informed decision based on relevant medical evidence, rather than making assumptions or relying solely on incomplete information. By gathering all relevant information, underwriters can ensure that their decisions are fair, objective, and based on the principles of risk assessment. It also helps to prevent adverse selection and ensures that insurance premiums are priced appropriately based on the level of risk presented by each applicant. Question 60. Anna, an insurance claims adjuster in Wisconsin, is handling a claim for a policyholder who has experienced a significant loss. Which of the following actions by Anna would be considered unethical? A. Explaining the claim settlement process clearly to the policyholder and keeping them informed of any updates. B. Requesting documentation and evidence to support the policyholder's claim. C. Delaying the processing of the claim without a valid reason to avoid paying out the claim. D. Negotiating a fair settlement with the policyholder based on the terms of their insurance policy. Correct answer. C. Delaying the processing of the claim without a valid reason to avoid paying out the claim. Explanation. In Wisconsin, insurance claims adjusters have an obligation to handle claims promptly and in good faith. Deliberately delaying the processing of a claim without a valid reason to avoid paying out the claim is considered unethical and may be in violation of state insurance regulations. Policyholders rely on insurance companies to fulfill their contractual obligations in a timely manner, especially during times of need. Delaying claim processing can cause financial hardship and emotional distress to policyholders, undermining the trust and confidence in the insurance industry. Claims adjusters should prioritize fair and efficient claims handling practices to ensure that policyholders receive the benefits they are entitled to under their insurance policies. Question 61. As an insurance underwriter in Wisconsin, you are reviewing an application for life insurance from an elderly applicant. Which of the following actions would be considered ethical? A. Automatically denying coverage to the applicant based solely on their age. B. Requesting additional information about the applicant's health and lifestyle to assess their risk. C. Offering the applicant a policy with higher premiums without justification. D. Failing to disclose potential risks associated with the policy to the applicant. Correct answer. B. Requesting additional information about the applicant's health and lifestyle to assess their risk. Explanation. In Wisconsin, insurance underwriters are required to evaluate each applicant's risk profile accurately and fairly, regardless of age. Requesting additional information about the applicant's health and lifestyle to assess their risk is an ethical practice that allows the underwriter to make an informed decision based on relevant factors. This helps ensure that the insurance policy is priced appropriately based on the level of risk presented by the applicant. Automatically denying coverage based solely on age or offering policies with higher premiums without justification would be considered discriminatory and unethical. Underwriters should always prioritize fairness, objectivity, and transparency in their underwriting decisions to uphold the integrity of the insurance industry. Question 62. Mike, an insurance broker in Wisconsin, is reviewing insurance policies with a client. During the discussion, the client expresses interest in a particular policy that offers higher commissions. Which of the following actions by Mike would be considered ethical? A. Recommending the policy with higher commissions without disclosing the commission structure. B. Disclosing the commission structure of each policy and explaining the features and benefits of each option. C. Advising the client to choose a policy solely based on the commission rate. D. Steering the client away from the policy with higher commissions to avoid conflicts of interest. Correct answer: B. Disclosing the commission structure of each policy and explaining the features and benefits of each option. Explanation: in Wisconsin, insurance professionals have a duty to act with transparency and disclose relevant information to clients. Mike should disclose the commission structure of each policy and provide a comprehensive explanation of the features and benefits of each option. This allows the client to make an informed decision based on their needs and preferences rather than solely on commission rates. Providing transparent information demonstrates Mike's commitment to ethical conduct and ensures that the client's best interests are prioritized. Question 63. Sarah, an insurance claims adjuster in Wisconsin, receives a claim from a policyholder who has experienced a covered loss. The policyholder provides documentation supporting the claim but requests that Sarah expedite the claims process due to urgent financial needs. What should Sarah do in this situation? A. Expedite the claims process for the policyholder to accommodate their urgent financial needs. B. Follow standard procedures for claim processing regardless of the policyholder's request. C. Deny the policyholder's request for an expedited process to avoid setting a precedent. D. Request additional documentation from the policyholder to delay the claims process. Correct answer: A. Expedite the claims process for the policyholder to accommodate their urgent financial needs. Explanation: in Wisconsin, insurance professionals have a duty to act in good faith and promptly process claims. Sarah should expedite the claims process for the policyholder to accommodate their urgent financial needs. Denying the request or delaying the claims process without valid reasons would be unethical and may cause undue hardship for the policyholder. By prioritizing the policyholder's needs and expediting the claims process, Sarah demonstrates her commitment to ethical conduct and providing excellent customer service. Question 64. Jack, a Wisconsin resident, wants to name multiple beneficiaries for his annuity. Which of the following beneficiary designations would provide the most flexibility for Jack's beneficiaries? A. Per capita. B. Per stirpes. C. Primary with contingent beneficiaries. D. Irrevocable beneficiaries. Correct answer: C. Primary with contingent beneficiaries. Explanation: naming primary beneficiaries with contingent beneficiaries provides the most flexibility for Jack's beneficiaries. With this designation, Jack can designate multiple primary beneficiaries to receive the death benefit if he passes away. If any of the primary beneficiaries predecease him, the contingent beneficiaries would then receive their share of the death benefit. This arrangement ensures that Jack's intended beneficiaries, including both primary and contingent beneficiaries, are accounted for and receive the death benefit according to his wishes. Per capita and per stirpes designations allocate the death benefit differently among beneficiaries and may not provide the same level of flexibility as naming both primary and contingent beneficiaries. Question 65. Laura, a Wisconsin resident, is concerned about the tax implications of annuity death benefits for her beneficiaries. Which of the following statements accurately describes the tax treatment of annuity death benefits? A. Annuity death benefits are always tax-free for beneficiaries. B. Annuity death benefits are subject to income tax for beneficiaries. C. Annuity death benefits are exempt from taxation if paid out as a lump sum to beneficiaries. D. Annuity death benefits are taxed at a lower rate for beneficiaries compared to other types of income. Correct answer: B. Annuity death benefits are subject to income tax for beneficiaries. Explanation: annuity death benefits are generally subject to income tax for beneficiaries. The tax treatment of annuity death benefits depends on various factors, including the type of annuity, the age of the annuitant at the time of death, and the payout option chosen by the beneficiary. If the annuity's growth has not been taxed, e.g., In a non-qualified annuity, the death benefit is typically taxed as ordinary income for the beneficiary. However, if the annuity's growth has already been taxed, e.g., in a Roth IRA annuity, the death benefit may be tax-free for beneficiaries. It's important for beneficiaries like Laura to consult with a tax advisor to understand the tax implications of annuity death benefits in their specific situation. Question 66. Sarah, a policyholder in Wisconsin, is considering taking a loan against her life insurance policy to cover unexpected medical expenses. Which of the following statements accurately describes the implications of policy loans? A. Policy loans do not affect the policy's death benefit. B. Policy loans are tax-deductible for the policyholder. C. Policy loans do not accrue interest over time. D. Policy loans must be repaid by the policyholder's beneficiaries upon the insured's death. Correct answer: A. Policy loans do not affect the policy's death benefit. Explanation: Policy loans allow policyholders to borrow against the cash value of their life insurance policies without surrendering the policy. One significant advantage of policy loans is that they do not affect the policy's death benefit. The death benefit remains intact, regardless of any outstanding loan balance. However, policy loans do accrue interest over time, and if left unpaid, the outstanding loan balance, plus accrued interest, will be deducted from the death benefit payable to the beneficiaries upon the insured's death. Policy loans are not tax-deductible for the policyholder, and it's essential for Sarah to understand the implications of borrowing against her life insurance policy before making a decision. Question 67. David, a Wisconsin resident, has taken a loan against his whole life insurance policy to finance home renovations. Which of the following statements accurately describes the interest charged on policy loans? A. The interest rate on policy loans is fixed and predetermined. B. The interest rate on policy loans is determined by the insurance company. C. The interest rate on policy loans is tax-deductible for the policyholder. D. The interest rate on policy loans is always higher than market interest rates. Correct answer: B. The interest rate on policy loans is determined by the insurance company. Explanation: The interest rate charged on policy loans is determined by the insurance company and is typically specified in the terms of the insurance policy. While the interest rate may vary among insurance companies, it is often competitive with prevailing market interest rates. Unlike other types of loans, policy loans may offer favorable interest rates, making them an attractive option for policyholders in need of cash. However, it's essential for David to review the terms of his policy loan carefully and understand the implications of borrowing against his life insurance policy. Question 68. Emma, a policyholder in Wisconsin, is considering surrendering her life insurance policy instead of taking a policy loan to cover her child's college tuition. Which of the following statements accurately describes the tax implications of surrendering a life insurance policy? A. Surrendering a life insurance policy is always tax-free for the policyholder. B. Surrendering a life insurance policy may result in taxable income for the policyholder. C. Surrendering a life insurance policy allows the policyholder to deduct the surrender value from their taxable income. D. Surrendering a life insurance policy exempts the policyholder from paying any taxes on the policy's cash value. Correct answer: B. Surrendering a life insurance policy may result in taxable income for the policyholder. Explanation: Surrendering a life insurance policy may result in taxable income for the policyholder if the cash value of the policy exceeds the policyholder's basis in the policy, total premiums paid. The portion of the surrender value that exceeds the policyholder's basis is considered taxable income and must be reported on the policyholder's tax return. It's crucial for Emma to consult with a tax advisor or financial professional before surrendering her life insurance policy to understand the potential tax implications fully. Question 69. Sarah, a resident of Wisconsin, is applying for a life insurance policy. What role does underwriting play in determining Sarah's policy premiums and coverage? A. Underwriting ensures that Sarah receives the lowest possible premiums regardless of her health status. B. Underwriting assesses Sarah's risk factors and determines her eligibility for coverage and premium rates. C. Underwriting guarantees coverage to Sarah without considering her medical history or lifestyle. D. Underwriting focuses solely on Sarah's age and ignores other factors when setting premiums. Correct answer: B. Underwriting assesses Sarah's risk factors and determines her eligibility for coverage and premium rates. Explanation: underwriting is the process insurance companies use to evaluate an applicant's risk factors and determine eligibility for coverage, as well as the appropriate premium rates. During underwriting, insurers assess various factors such as the applicant's age, health history, lifestyle choices, occupation, and hobbies to determine the level of risk they represent. Based on this evaluation, insurers decide whether to offer coverage, the type of coverage offered, and the premium rates. Therefore, underwriting plays a crucial role in ensuring that policy premiums and coverage are tailored to the individual's risk profile. Question 70. James is applying for a health insurance policy in Wisconsin. What information is typically evaluated during the underwriting process for health insurance? A. Only James's age and gender are considered in the underwriting process. B. Underwriting reviews James's medical history, current health status, and lifestyle habits. C. Underwriting ignores James's medical history and focuses solely on his current health status. D. James's occupation is the primary factor considered during the underwriting process. Correct answer: B. Underwriting reviews James's medical history, current health status, and lifestyle habits. Explanation: during the underwriting process for health insurance, insurers typically review various aspects of the applicant's health and lifestyle to assess their risk level. This includes evaluating the applicant's medical history, current health status, any pre-existing conditions, medications, lifestyle habits such as smoking or exercise routine, and sometimes even family medical history. Insurers use this information to determine the applicant's eligibility for coverage and to set appropriate premium rates. By evaluating these factors comprehensively, insurers aim to accurately assess the risk associated with providing coverage to the applicant. Question 71. David, a Wisconsin resident, is applying for a life insurance policy with a high coverage amount. How does the desired coverage amount impact the underwriting process? A. The desired coverage amount has no impact on the underwriting process. B. Higher coverage amounts may require more extensive underwriting to assess the applicant's risk. C. Lower coverage amounts result in more lenient underwriting requirements. D. Underwriting is solely based on the applicant's age and gender, regardless of the desired coverage amount. Correct answer: B. Higher coverage amounts may require more extensive underwriting to assess the applicant's risk. Explanation: the desired coverage amount can impact the underwriting process, especially for higher coverage amounts. Insurers may conduct more extensive underwriting procedures, such as requiring a comprehensive medical exam or additional medical tests, to assess the applicant's risk adequately. Higher coverage amounts represent a greater financial risk for the insurer, so they may require more thorough evaluation of the applicant's health and lifestyle to mitigate that risk. Therefore, applicants seeking larger coverage amounts should be prepared for more rigorous underwriting requirements to obtain their desired coverage. Question 72. Rachel is applying for a life insurance policy in Wisconsin. During the underwriting process, what role does the applicant's occupation play in determining coverage and premiums? A. The applicant's occupation has no influence on the underwriting process. B. Certain occupations may be deemed high risk, resulting in higher premiums or coverage limitations. C. All occupations are treated equally, and underwriting decisions are solely based on health factors. D. The applicant's occupation determines the coverage amount but not the premiums. Correct answer: B. Certain occupations may be deemed high risk, resulting in higher premiums or coverage limitations. Explanation: the applicant's occupation is an essential factor considered during the underwriting process, as certain occupations may pose higher risks than others. For example, individuals in hazardous occupations such as firefighting or construction may face higher premiums or coverage limitations due to the increased likelihood of workplace injuries or accidents. Insurers assess the risk associated with different occupations and adjust premiums and coverage accordingly to reflect the level of risk. Therefore, applicants should be aware that their occupation can impact their insurance premiums and coverage options. Question 73. Which of the following is a factor that underwriters consider when assessing the risk of insuring an applicant for a life insurance policy in Wisconsin? A. Educational background. B. Hobbies and recreational activities. C. Personal credit score. D. Driving record. Correct answer, D. Driving record. Explanation. When underwriting life insurance policies in Wisconsin, underwriters typically consider various factors to assess the risk associated with insuring an applicant. One crucial factor is the applicant's driving record, which can provide insights into their overall risk profile. A poor driving record, characterized by accidents or traffic violations, may suggest a higher likelihood of premature death, thus impacting the underwriting decision. Options A. Educational background, B. Hobbies and recreational activities, and C. Personal credit score may be relevant in other contexts but are not typically primary considerations in life insurance underwriting. Question 74. In Wisconsin, which of the following statements regarding the underwriting process for health insurance policies is accurate? A. Underwriters focus solely on the applicant's current health status. B. Pre-existing conditions are not considered during underwriting. C. Underwriters use medical underwriting to assess the risk of applicants. D. Underwriting for health insurance policies is optional for insurers. Correct answer. C. Underwriters use medical underwriting to assess the risk of applicants. Explanation. In Wisconsin, underwriters use medical underwriting to assess the risk associated with applicants for health insurance policies. Medical underwriting involves evaluating the applicant's health history, including pre-existing conditions, to determine the appropriate premium rates or coverage terms. Option A. Underwriters focus solely on the applicant's current health status is incorrect, as they consider both current health status and medical history. Option B. Pre-existing conditions are not considered during underwriting is incorrect, as pre-existing conditions are indeed a significant factor in health insurance underwriting. Option D. Underwriting for health insurance policies is optional for insurers is incorrect, as underwriting is typically mandatory for insurers to accurately assess risk and determine premiums. Question 75. Which of the following best describes the role of underwriting in the policy issuance process for insurance policies in Wisconsin? A. Underwriting ensures that all applicants receive the same premium rates. B. Underwriting determines the duration of the policy term. C. Underwriting evaluates the risk associated with insuring individual applicants. D. Underwriting focuses solely on verifying applicant identity. Correct answer. C. Underwriting evaluates the risk associated with insuring individual applicants. Explanation. In Wisconsin, underwriting plays a crucial role in the policy issuance process by evaluating the risk associated with insuring individual applicants. Underwriters assess various factors, such as health status, lifestyle habits, and driving record, to determine the appropriate premium rates and coverage terms for each applicant. Option A. Underwriting ensures that all applicants receive the same premium rates is incorrect, as underwriting involves individualized risk assessment. Option B. Underwriting determines the duration of the policy term is incorrect, as policy term duration is typically determined by the policyholder at the time of purchase. Option D. Underwriting focuses solely on verifying applicant identity is incorrect, as underwriting encompasses a comprehensive risk assessment beyond identity verification. Question 76. As an insurance underwriter in Wisconsin, what ethical considerations should you keep in mind when evaluating an applicant's risk profile? A. Relying solely on the applicant's self-reported information without verifying its accuracy. B. Using discriminatory criteria such as race or ethnicity to assess the applicant's risk. C. Ensuring that underwriting decisions are based on relevant factors such as the applicant's medical history and lifestyle. D. Offering preferential treatment to applicants who are friends or relatives of company employees. Correct answer. C. Ensuring that underwriting decisions are based on relevant factors such as the applicant's medical history and lifestyle. Explanation. In Wisconsin, insurance underwriters have a responsibility to evaluate each applicant's risk profile accurately and fairly. This includes considering relevant factors such as the applicant's medical history, lifestyle, and occupation. Relying solely on self-reported information without verifying its accuracy or using discriminatory criteria such as race or ethnicity would be unethical and may violate state insurance regulations. Underwriters should prioritize fairness, objectivity, and transparency in their underwriting decisions to ensure that insurance policies are priced appropriately based on the level of risk presented by each applicant. By adhering to ethical standards, underwriters can maintain the trust and confidence of policyholders and regulators in the insurance industry. Question 77. Laura, an insurance claims adjuster in Wisconsin, is handling a claim for a policyholder who has suffered a loss due to a natural disaster. Which of the following actions by Laura would be considered unethical? A. Conducting a thorough investigation to assess the extent of the policyholder's loss and determine coverage. B. Offering emotional support and guidance to the policyholder during the claims process. C. Deliberately misinterpreting the terms of the insurance policy to deny the policyholder's claim. D. Explaining the claims settlement process clearly to the policyholder and keeping them informed of any updates. Correct answer. C. Deliberately misinterpreting the terms of the insurance policy to deny the policyholder's claim. Explanation. In Wisconsin, insurance claims adjusters have a duty to handle claims in good faith and in accordance with the terms of the insurance policy. Deliberately misinterpreting the terms of the policy to deny the policyholder's claim would be unethical and may constitute insurance fraud. Policyholders rely on insurance companies to fulfill their contractual obligations promptly and fairly, especially during times of need. Misrepresenting or denying valid claims undermines the integrity of the claims handling process and erodes trust in the insurance industry. Claims adjusters should prioritize fairness, honesty, and transparency in their dealings with policyholders to ensure that claims are handled ethically and in compliance with state insurance regulations. Question 78. As an insurance underwriter in Wisconsin, you receive an application from an applicant with a history of mental health issues. Which of the following actions would be considered ethical? A. Automatically denying coverage to the applicant based solely on their mental health history. B. Requesting additional medical information and documentation to assess the applicant's risk accurately. C. Offering the applicant a policy with significantly higher premiums without justification. D. Failing to disclose potential exclusions or limitations related to mental health coverage to the applicant. Correct answer. B. Requesting additional medical information and documentation to assess the applicant's risk accurately. Explanation. In Wisconsin, insurance underwriters must evaluate each applicant's risk profile accurately and fairly, regardless of their medical history. Requesting additional medical information and documentation to assess the applicant's risk accurately is an ethical practice that allows the underwriter to make informed decisions based on relevant factors. This helps ensure that the insurance policy is priced appropriately based on the level of risk presented by the applicant. Automatically denying coverage based solely on mental health history or offering policies with significantly higher premiums without justification would be considered discriminatory and unethical. Underwriters should prioritize fairness, objectivity, and transparency in their underwriting decisions to uphold the integrity of the insurance industry. Question 79. John, an insurance underwriter in Wisconsin, is tasked with setting rates for a new homeowner's insurance product. Which of the following factors should John consider when determining the appropriateness of the rates? A. The profit margin desired by the insurance company. B. The personal preferences of individual policyholders. C. Actuarial principles based on risk and loss data. D. The recommendations of insurance agents selling the product. Correct answer. C. Actuarial principles based on risk and loss data. Explanation. As an insurance underwriter, John should base his rate-setting decisions on actuarial principles, which involve analyzing risk and loss data to determine appropriate premiums. Actuarial science uses mathematical and statistical methods to assess risk and calculate rates that accurately reflect the likelihood of claims occurring. By considering factors such as historical loss experience, property characteristics, and geographic location, John can ensure that the rates for the homeowner's insurance product are fair, adequate, and actuarially sound. This approach helps maintain the financial stability of the insurance company and ensures that policyholders are charged premiums that align with their level of risk exposure. Question 80. In Wisconsin, insurance agents are required to obtain a license before they can sell insurance products to clients. Which of the following statements regarding insurance licensing and continuing education requirements for agents is correct? A. Once licensed, insurance agents are not required to undergo any additional training or education. B. Insurance agents must complete pre-licensing education and pass a state licensing exam to obtain their license. C. Continuing education is optional for insurance agents and not necessary for license renewal. D. Insurance agents are exempt from licensing requirements if they work for a large insurance company. Correct answer. B. Insurance agents must complete pre-licensing education and pass a state licensing exam to obtain their license. Explanation. In Wisconsin, insurance agents must fulfill specific requirements to obtain their license, including completing pre-licensing education and passing a state licensing exam. Pre-licensing education provides agents with essential knowledge and skills to understand insurance products, regulations, and ethical standards. Passing the licensing exam demonstrates the agent's competency in insurance principles and practices. Additionally, insurance agents are required to participate in continuing education to renew their licenses periodically. Continuing education ensures that agents stay updated on industry trends, regulations, and best practices, enhancing their professionalism and ability to serve clients effectively. Question 81. Sarah is a newly licensed insurance agent in Wisconsin. What is the primary purpose of continuing education requirements for insurance agents? A. To increase the cost of maintaining an insurance license for agents. B. To provide opportunities for agents to socialize and network with industry professionals. C. To ensure that agents stay informed about changes in insurance laws, regulations, and industry practices. D. To allow agents to specialize in specific types of insurance without additional training. Correct answer. C. To ensure that agents stay informed about changes in insurance laws, regulations, and industry practices. Explanation. Continuing education requirements for insurance agents in Wisconsin serve to ensure that agents stay informed about changes in insurance laws, regulations, and industry practices. By participating in continuing education courses, agents can update their knowledge and skills, stay abreast of emerging trends, and maintain compliance with regulatory requirements. This ongoing training helps agents better serve their clients, navigate complex insurance transactions, and uphold ethical standards. Additionally, staying informed about changes in the insurance landscape allows agents to adapt to market dynamics and remain competitive in their field. Question 82. John, an insurance agent in Wisconsin, is due to renew his insurance license. Which of the following actions must John take to renew his license? A. Submit a renewal fee without completing any additional requirements. B. Complete a renewal application but forego continuing education requirements. C. Fulfill continuing education requirements and submit a renewal application and fee. D. Renew his license through his employer without completing any paperwork. Correct answer. C. Fulfill continuing education requirements and submit a renewal application and fee. Explanation. In Wisconsin, insurance agents are required to fulfill continuing education requirements to renew their licenses. These requirements typically include completing a certain number of approved continuing education credits within a specific renewal period. Agents must also submit a renewal application and fee to the Wisconsin Office of the Commissioner of Insurance, OCI, to renew their licenses. Fulfilling continuing education requirements ensures that agents maintain their knowledge and skills, stay updated on industry developments, and uphold professional standards. Failure to renew the license by meeting these requirements may result in the expiration of the agent's license and the inability to legally sell insurance products in Wisconsin. Question 83. Michael, a resident of Wisconsin, is considering purchasing a fixed annuity. Which of the following statements accurately describes a fixed annuity? A. Fixed annuities provide returns linked to the performance of the stock market. B. Fixed annuities offer guaranteed minimum interest rates for a specified period. C. Fixed annuities allow annuitants to choose their own investment options. D. Fixed annuities are only available to individuals under the age of 50. Correct answer. B. Fixed annuities offer guaranteed minimum interest rates for a specified period. Explanation. Fixed annuities provide annuitants with guaranteed minimum interest rates for a specified period, typically ranging from 1 to 10 years. These interest rates are set by the insurance company and remain constant regardless of market fluctuations. Fixed annuities offer a stable and predictable source of income, making them suitable for individuals seeking to mitigate investment risk and ensure steady retirement income. It's essential for Michael to understand the features and benefits of fixed annuities before making a purchase decision. Question 84. Emily, a Wisconsin resident, is interested in purchasing a variable annuity. Which of the following statements accurately describes a variable annuity? A. Variable annuities offer fixed interest rates for a specified period. B. Variable annuities guarantee a minimum return on investment. C. Variable annuities provide investment options linked to the performance of underlying investment portfolios. D. Variable annuities are not subject to market risk. Correct answer. C. Variable annuities provide investment options linked to the performance of underlying investment portfolios. Explanation. Variable annuities allow annuitants to allocate their premiums among various investment options, typically including stocks, bonds, and money market funds. The performance of these investment options determines the value of the annuity, and annuitants assume market risk. Unlike fixed annuities, variable annuities do not offer guaranteed minimum interest rates, and the value of the annuity may fluctuate based on market conditions. It's important for Emily to carefully evaluate her risk tolerance and investment objectives before purchasing a variable annuity. Question 85. David, a Wisconsin resident, is considering purchasing an indexed annuity. Which of the following statements accurately describes an indexed annuity? A. Indexed annuities offer fixed interest rates with no market exposure. B. Indexed annuities provide returns linked to the performance of a specific stock market index. C. Indexed annuities guarantee a minimum return on investment. D. Indexed annuities offer immediate access to annuity funds without any surrender charges. Correct answer. B. Indexed annuities provide returns linked to the performance of a specific stock market index. Explanation. Indexed annuities offer returns linked to the performance of a specific stock market index, such as the S&P 500. However, indexed annuities typically provide a minimum guaranteed interest rate, ensuring that annuitants receive at least a specified level of return, regardless of index performance. Indexed annuities provide an opportunity for potential growth based on market performance while offering downside protection through the guaranteed minimum interest rate. David should carefully review the terms and features of indexed annuities to determine if they align with his investment goals and risk tolerance. Question 86. John, a policyholder in Wisconsin, has accumulated a significant cash value in his whole life insurance policy. He is considering taking a policy loan to fund a new business venture. Which of the following statements accurately describes the consequences of defaulting on a policy loan? A. Defaulting on a policy loan does not affect the policy's death benefit. B. Defaulting on a policy loan may result in the policy's lapse and loss of coverage. C. Defaulting on a policy loan exempts the policyholder from any financial obligations. D. Defaulting on a policy loan transfers the loan liability to the insurance company. Correct answer. B. Defaulting on a policy loan may result in the policy's lapse and loss of coverage. Explanation. Defaulting on a policy loan occurs when the policyholder fails to repay the loan according to the terms of the loan agreement. In such cases, the outstanding loan balance, including any accrued interest, becomes due and payable. If the policyholder does not repay the loan, the insurance company may use the cash value of the policy to satisfy the outstanding loan balance. If the cash value is insufficient to cover the loan, the policy may lapse, resulting in the loss of coverage. It's crucial for John to understand the potential consequences of defaulting on a policy loan before proceeding with his business venture. Question 87. Anna, a resident of Wisconsin, is considering borrowing against her universal life insurance policy to finance her child's education. Which of the following statements accurately describes the flexibility of policy loans? A. Policy loans have strict repayment schedules and cannot be adjusted. B. Policy loans allow policyholders to choose the repayment amount and schedule. C. Policy loans can only be used for specific purposes approved by the insurance company. D. Policy loans require the policyholder to provide collateral equal to the loan amount. Correct answer. B. Policy loans allow policyholders to choose the repayment amount and schedule. Explanation. Policy loans offer flexibility to policyholders in terms of repayment. Unlike traditional loans, policyholders can choose the repayment amount and schedule based on their financial circumstances and preferences. Policyholders can make periodic payments towards the loan balance or repay the loan in full at any time without incurring prepayment penalties. This flexibility allows Anna to tailor the loan repayment to fit her budget and financial goals while accessing the cash value of her universal life insurance policy to fund her child's education. Question 88. Mark, a policyholder in Wisconsin, is considering surrendering his variable life insurance policy due to financial difficulties. Which of the following statements accurately describes the impact of surrender charges on policy surrender? A. Surrender charges only apply to policy loans and not policy surrenders. B. Surrender charges are deducted from the policy's cash value upon surrender. C. Surrender charges are waived if the policyholder surrenders the policy within the first year. D. Surrender charges are tax deductible for the policyholder. Correct answer. B. Surrender charges are deducted from the policy's cash value upon surrender. Explanation. Surrender charges are fees imposed by the insurance company if the policyholder surrenders the policy before the end of the surrender period, which is typically the first few years of the policy. When a policyholder surrenders a life insurance policy, the insurance company deducts surrender charges from the policy's cash value before dispersing any remaining funds to the policyholder. Surrender charges help recoup the insurer's initial costs associated with issuing the policy, such as commissions and administrative expenses. Mark should be aware of the surrender charges applicable to his variable life insurance policy before making a decision to surrender it. Question 89. Michael, a resident of Wisconsin, is applying for a disability insurance policy. What role does the applicant's medical history play in the underwriting process for disability insurance? A. Medical history has no relevance to the underwriting process for disability insurance. B. Underwriting focuses solely on the applicant's current health status, not past medical history. C. The applicant's medical history is a critical factor in assessing eligibility and determining premium rates. D. Disability insurance underwriting only considers the applicant's occupation, not medical history. Correct answer. C. The applicant's medical history is a critical factor in assessing eligibility and determining premium rates. Explanation. In the underwriting process for disability insurance, the applicant's medical history plays a significant role in assessing eligibility and determining premium rates. Insurers evaluate the applicant's past medical conditions, surgeries, treatments, medications, and any ongoing health concerns to assess the risk of future disability claims. Pre-existing medical conditions or health issues may impact the applicant's ability to qualify for coverage or may result in higher premiums to offset the increased risk of disability. Therefore, applicants should be prepared to provide detailed information about their medical history during the underwriting process for disability insurance. Question 90. Emma is considering applying for a long-term care insurance policy in Wisconsin. How does age influence the underwriting process for long-term care insurance? A. Age has no impact on the underwriting process for long-term care insurance. B. Younger applicants are typically charged higher premiums due to longer coverage duration. C. Older applicants may face higher premiums or stricter underwriting requirements due to increased health risks. D. Long-term care insurance underwriting decisions are solely based on the applicant's financial status. Correct answer. C. Older applicants may face higher premiums or stricter underwriting requirements due to increased health risks. Explanation. Age is a significant factor in the underwriting process for long-term care insurance. Older applicants may face higher premiums or stricter underwriting requirements due to the increased likelihood of needing long-term care services as they age. Insurers may require older applicants to undergo more extensive medical evaluations or may limit coverage options based on age-related health concerns. Additionally, premiums for long-term care insurance often increase with age, reflecting the higher risk of needing care as individuals grow older. Therefore, applicants should consider purchasing long-term care insurance at a younger age to potentially secure lower premiums and more favorable underwriting terms. Question 91. Which of the following statements accurately describes a long-term care insurance rider in Wisconsin? A. It provides coverage for short-term medical expenses. B. It is a standalone insurance policy separate from life insurance. C. It offers coverage for expenses related to chronic illnesses or disabilities. D. It only covers medical costs incurred in a hospital setting. Correct answer. C. It offers coverage for expenses related to chronic illnesses or disabilities. Explanation. In Wisconsin, a long-term care insurance rider is an additional benefit that can be added to a life insurance policy. This rider provides coverage for expenses associated with chronic illnesses, disabilities, or long-term care needs, such as nursing home care, assisted living facilities, and in-home care services. Unlike standalone long-term care insurance policies, which are separate contracts, riders are attached to existing life insurance policies, offering policyholders the option to access funds to cover long-term care expenses while still providing a death benefit to beneficiaries. Question 92. When considering a long-term care insurance rider in Wisconsin, which of the following factors is typically not taken into account? A. Age and health status of the insured. B. Duration of the coverage period. C. Available cash value of the life insurance policy. D. Employment history of the insured. Correct answer. D. Employment history of the insured. Explanation. In Wisconsin, when evaluating eligibility for a long-term care insurance rider, insurers typically consider factors such as the age and health status of the insured, the duration of the coverage period, and the available cash value of the life insurance policy. However, employment history is not usually a determining factor for qualifying for a long-term care insurance rider. Instead, insurers focus on the insured's health and financial situation to assess the risk and determine the premium rates for the rider. Question 93. Which of the following options best describes the benefit of adding a long-term care insurance rider to a life insurance policy in Wisconsin? A. It guarantees a higher death benefit payout. B. It allows for tax-free withdrawals of the cash value. C. It provides financial protection against long-term care expenses. D. It reduces the premium rates of the life insurance policy. Correct answer. C. It provides financial protection against long-term care expenses. Explanation. Adding a long-term care insurance rider to a life insurance policy in Wisconsin offers the benefit of financial protection against long-term care expenses. By incorporating this rider, policyholders can access funds from the policy's death benefit to cover costs associated with chronic illnesses, disabilities, or long-term care needs, thus safeguarding their assets and providing peace of mind for future care needs. This rider enhances the versatility of the life insurance policy by offering an additional layer of coverage beyond traditional death benefits. Question 94. Mark, an insurance agent in Wisconsin, is approached by a client who requests that he falsify information on their insurance application to lower their premium. What should Mark do in this situation? A. Agree to the client's request to maintain the client's satisfaction. B. Refuse the client's request and explain the consequences of providing false information. C. Consult with a colleague to determine the best course of action. D. Falsify the information as requested but keep a record of the client's request for his own protection. Correct answer. B. Refuse the client's request and explain the consequences of providing false information. Explanation. In Wisconsin, insurance professionals are obligated to uphold ethical standards and integrity in their conduct. Falsifying information on an insurance application is illegal and unethical. Mark should refuse the client's request and explain that providing false information can lead to serious consequences, including policy cancellation, denied claims, and legal action. By refusing the request and educating the client about the importance of honesty in insurance transactions, Mark demonstrates his commitment to ethical behavior and protecting the interests of both the client and the insurance company. Question 95. Anna, an insurance broker in Wisconsin, receives a commission from an insurance company for selling their products. Which of the following actions by Anna would be considered ethical regarding commission disclosure? A. Disclosing the commission amount to clients upon request. B. Withholding information about the commission to avoid complicating the sale. C. Providing clients with a general estimate of commission rates without specifics. D. Only disclosing the commission amount if required by state law or regulation. Correct answer. A. Disclosing the commission amount to clients upon request. Explanation. In Wisconsin, insurance professionals have a duty to act with transparency and disclose relevant information to clients. Disclosing the commission amount to clients upon request is ethical and ensures transparency in the client-agent relationship. Withholding information about the commission or providing vague estimates may undermine trust and create conflicts of interest. By disclosing the commission amount, Anna demonstrates her commitment to ethical conduct and maintains the trust and confidence of her clients. Question 96. David, an insurance adjuster in Wisconsin, is handling a claim for a client who suffered a covered loss. The client requests an expedited claims process due to urgent financial needs. What should David do in this situation? A. Prioritize the client's claim and expedite the claims process to meet the client's needs. B. Follow standard procedures for claim processing regardless of the client's request. C. Deny the client's request for an expedited process to avoid setting a precedent. D. Request additional documentation from the client to delay the claims process. Correct answer. A. Prioritize the client's claim and expedite the claims process to meet the client's needs. Explanation. In Wisconsin, insurance professionals have a duty to act in good faith and promptly process claims. David should prioritize the client's claim and expedite the claims process to meet the client's urgent financial needs. Denying the request or delaying the claims process without valid reasons would be unethical and may violate the client's rights. By prioritizing the client's needs and expediting the claims process, David demonstrates his commitment to ethical conduct and providing excellent customer service. Question 97. In Wisconsin, if an annuitant passes away before the annuity's maturity date, what happens to the remaining funds in the annuity? A. The remaining funds are forfeited to the insurance company. B. The remaining funds are distributed to the annuitant's estate. C. The remaining funds are paid out to the annuitant's designated beneficiary. D. The remaining funds are used to purchase a new annuity for the annuitant's heirs. Correct answer. C. The remaining funds are paid out to the annuitant's designated beneficiary. Explanation. In Wisconsin, if an annuitant passes away before the annuity's maturity date, the remaining funds in the annuity are typically paid out to the annuitant's designated beneficiary. This ensures that the beneficiary receives the death benefit and any remaining funds from the annuity. The beneficiary may have the option to receive the funds as a lump sum, installment payments, or as a life income, depending on the payout options available under the annuity contract. It's important for annuitants to designate a beneficiary to ensure that their loved ones receive the death benefit in the event of their death. Question 98. Martha, a resident of Wisconsin, is considering purchasing a joint and survivor annuity with her spouse. Which of the following statements accurately describes how the death benefit would be paid out under this annuity option? A. The death benefit is paid out only to the surviving spouse upon the death of the annuitant. B. The death benefit is paid out to the surviving spouse and any contingent beneficiaries named by the annuitant. C. The death benefit is forfeited to the insurance company if both annuitants pass away simultaneously. D. The death benefit is paid out to the annuitant's estate upon the death of the annuitant. Correct answer. A. The death benefit is paid out only to the surviving spouse upon the death of the annuitant. Explanation. In a joint and survivor annuity, the death benefit is typically paid out only to the surviving spouse upon the death of the annuitant. This annuity option provides income for both spouses during their lifetimes, with the assurance that the surviving spouse will continue to receive payments after the death of the annuitant. Contingent beneficiaries may not receive the death benefit under this annuity option unless specifically designated by the annuitant. It's important for married individuals like Martha to consider the joint and survivor annuity option to ensure financial security for their surviving spouse in retirement. Question 99. David, a Wisconsin resident, has named his son as the primary beneficiary of his annuity. However, David's son predeceases him. What happens to the death benefit in this situation? A. The death benefit is forfeited to the insurance company. B. The death benefit is paid out to David's estate. C. The death benefit is distributed among David's surviving children. D. The death benefit is paid out according to the contingent beneficiary designation, if one exists. Correct answer. D. The death benefit is paid out according to the contingent beneficiary designation, if one exists. Explanation. If David's primary beneficiary predeceases him, the death benefit from his annuity would typically be paid out according to the contingent beneficiary designation, if one exists. A contingent beneficiary is a backup beneficiary designated by the annuitant to receive the death benefit if the primary beneficiary is unable to do so. If David did not name a contingent beneficiary or if the contingent beneficiary also predeceases him, the death benefit may be paid out according to the terms of the annuity contract or to David's estate. It's important for annuitants to review and update their beneficiary designations regularly to ensure that their wishes are carried out appropriately. Question 100. Emily, a Wisconsin resident, is considering purchasing a variable annuity. Which of the following statements accurately describes the death benefit options available with a variable annuity? A. Variable annuities do not offer a death benefit to beneficiaries. B. The death benefit with a variable annuity is fixed and predetermined. C. The death benefit with a variable annuity depends on the performance of the underlying investments. D. The death benefit with a variable annuity is guaranteed to exceed the annuitant's initial investment. Correct answer. C. The death benefit with a variable annuity depends on the performance of the underlying investments. Explanation. In a variable annuity, the death benefit for beneficiaries depends on the performance of the underlying investments within the annuity. Unlike fixed annuities that offer a predetermined death benefit, variable annuities provide beneficiaries with a death benefit that fluctuates based on the investment performance of the annuity's underlying assets. If the investments perform well, the death benefit may increase, but if they perform poorly, the death benefit may decrease. Variable annuities offer the potential for higher returns but also come with investment risks, including the risk of loss of principal. Question 101. Emily, a policyholder in Wisconsin, is considering taking a policy loan against her whole life insurance policy to cover emergency medical expenses. Which of the following statements accurately describes the impact of policy loans on the policy's cash value? A. Policy loans increase the policy's cash value. B. Policy loans decrease the policy's cash value. C. Policy loans have no effect on the policy's cash value. D. Policy loans reduce the policy's cash value temporarily, but it is restored once the loan is repaid. Correct answer. B. Policy loans decrease the policy's cash value. Explanation. When a policyholder takes a loan against their whole life insurance policy, the loan amount is typically withdrawn from the policy's cash value. As a result, the policy's cash value decreases by the amount of the loan. However, the reduction in cash value is temporary, as the policyholder repays the loan, including any accrued interest. It's important for Emily to consider the impact of a policy loan on her policy's cash value before proceeding with the loan, as it may affect the policy's performance and available benefits. Question 102. Michael, a resident of Wisconsin, is considering taking a policy loan against his universal life insurance policy to fund home renovations. Which of the following statements accurately describes the tax treatment of policy loans? A. Policy loans are treated as taxable income to the policyholder. B. Policy loans are tax deductible for the policyholder. C. Policy loans are not subject to taxation if repaid within the policy's loan interest grace period. D. Policy loans trigger capital gains tax for the policyholder. Correct answer. C. Policy loans are not subject to taxation if repaid within the policy's loan interest grace period. Explanation. Policy loans are generally not considered taxable income to the policyholder, as they represent borrowed funds rather than income. Additionally, policy loans are not tax deductible for the policyholder. However, if a policy loan remains outstanding beyond the policy's loan interest grace period, any accrued interest may be subject to taxation. To avoid tax implications, policyholders should ensure timely repayment of policy loans within the grace period specified in the policy contract. Michael should consult with a tax advisor to understand the tax treatment of policy loans and make informed financial decisions. Question 103. Sophie, a policyholder in Wisconsin, is considering taking a policy loan against her variable life insurance policy to invest in the stock market. Which of the following statements accurately describes the risk associated with using policy loans for investment purposes? A. Policy loans provide a risk-free source of funds for investment. B. Policy loans may result in a loss of policy benefits if the invested funds perform poorly. C. Policy loans guarantee a positive return on investment. D. Policy loans allow policyholders to leverage their policy's cash value without any downside risk. Correct answer. B. Policy loans may result in a loss of policy benefits if the invested funds perform poorly. Explanation. Using policy loans for investment purposes carries inherent risks, as the performance of the invested funds is not guaranteed. If the invested funds underperform or incur losses, there may be insufficient cash value to repay the loan and any accrued interest. In such cases, the policyholder may risk losing policy benefits, such as the death benefit or cash value accumulation. Sophie should carefully evaluate the potential risks and returns associated with using policy loans for investment and consider alternative financing options to mitigate the risk of loss. Question 104. David, a policyholder in Wisconsin, is interested in the cash value accumulation feature of permanent life insurance policies. What is a characteristic of the cash value in a universal life insurance policy? A. The cash value is guaranteed to increase at a fixed rate. B. The cash value is invested in the insurer's general investment account. C. The cash value is unaffected by policy loans or withdrawals. D. The cash value is adjusted based on the policy's dividends. Correct answer. B. The cash value is invested in the insurer's general investment account. Explanation. In a universal life insurance policy, the cash value is typically invested by the insurance company in its general investment account. The insurer manages these investments, which may include a mix of stocks, bonds, and other securities. The performance of these investments directly impacts the growth of the cash value. Policyholders may have the option to allocate their cash value among different investment options offered by the insurer, such as fixed interest accounts or variable investment accounts. It's important for policyholders like David to review the investment options available within their universal life policies and understand the associated risks and returns. Question 105. Nathan, a resident of Wisconsin, is considering borrowing against his variable universal life insurance policy. What impact does a policy loan have on the cash value of a variable universal life policy? A. A policy loan increases the cash value of the policy. B. A policy loan decreases the cash value of the policy. C. A policy loan has no effect on the cash value of the policy. D. A policy loan reduces the death benefit but does not affect the cash value. Correct answer. B. A policy loan decreases the cash value of the policy. Explanation. When a policyholder borrows against the cash value of a variable universal life insurance policy, the loan amount is typically withdrawn from the policy's cash value. As a result, the cash value of the policy decreases by the amount of the loan, plus any accrued interest. While policy loans provide access to funds for policyholders' financial needs, they reduce the available cash value and may impact the policy's performance and benefits. Nathan should carefully consider the long-term implications of taking a policy loan and explore alternative financing options if available. Question 106. Ethan, a policyholder in Wisconsin, is exploring options to enhance the cash value growth of his universal life insurance policy. What is a characteristic of the cash value in a flexible premium universal life insurance policy? A. The cash value grows at a fixed rate determined by the insurer. B. The cash value is invested in the insurer's proprietary investment accounts. C. The cash value fluctuates based on market performance. D. The cash value remains constant regardless of premium payments. Correct answer. C. The cash value fluctuates based on market performance. Explanation. In a flexible premium universal life insurance policy, the cash value fluctuates based on the performance of underlying investments chosen by the policyholder. Policyholders have the flexibility to allocate premiums and cash value among various investment options offered by the insurer, such as fixed interest accounts, equity funds, or bond funds. The cash value growth is not guaranteed and is subject to market volatility and investment risk. Ethan should review the investment options available within his universal life policy and adjust his investment strategy based on his risk tolerance and financial goals. Question 107. Jane, an insurance agent in Wisconsin, is approached by a potential client who asks her to provide misleading information on their insurance application to secure a lower premium. Which of the following actions should Jane take in this situation? A. Agree to the client's request to secure their business. B. Refuse the client's request and explain the importance of providing accurate information. C. Provide the client with guidance on how to falsify the information themselves. D. Consult with her supervisor before making a decision. Correct answer. B. Refuse the client's request and explain the importance of providing accurate information. Explanation. In Wisconsin, insurance professionals are obligated to uphold ethical standards and integrity in their dealings with clients. Agreeing to provide misleading information on an insurance application would be unethical and may violate state insurance regulations. Jane should refuse the client's request and explain that providing accurate information is essential for obtaining appropriate coverage and avoiding potential legal consequences. By refusing to engage in dishonest practices and educating the client about the importance of honesty, Jane demonstrates her commitment to ethical behavior and protecting the interests of both the client and the insurance company. Question 108. In Wisconsin, insurance companies are required to file their rates and forms with the Office of the Commissioner of Insurance, OCI. What is the purpose of this regulatory requirement? A. To allow insurance companies to set their own rates and forms without government interference. B. To ensure that insurance rates are competitive and affordable for consumers. C. To protect consumers by ensuring that insurance rates and forms are fair, reasonable, and comply with state regulations. D. To streamline the insurance market by reducing bureaucratic oversight and paperwork. Correct answer. C. To protect consumers by ensuring that insurance rates and forms are fair, reasonable, and comply with state regulations. Explanation. The regulatory requirement for insurance companies to file their rates and forms with the OCI serves to protect consumers by ensuring that insurance products are fair, reasonable, and compliant with state regulations. By reviewing and approving rates and forms, the OCI can prevent discriminatory pricing practices, ensure that policy language is clear and understandable, and verify that insurance products provide adequate coverage to policyholders. This oversight helps maintain the integrity and stability of the insurance market and promotes consumer confidence in insurance products. Question 109. Jennifer, an insurance agent in Wisconsin, is reviewing a new policy form provided by her insurance company. What should Jennifer consider before offering the policy to her clients? A. The potential profitability of selling the policy to her clients. B. The complexity of the policy form and its potential impact on client understanding. C. The availability of alternative insurance products from competing companies. D. The approval of the policy form by the Office of the Commissioner of Insurance, OCI. Correct answer. D. The approval of the policy form by the Office of the Commissioner of Insurance, OCI. Explanation. Before offering a new policy to clients in Wisconsin, Jennifer should ensure that the policy form has been approved by the OCI. This regulatory approval indicates that the policy meets state standards for clarity, fairness, and compliance with insurance laws and regulations. Failing to verify the approval of the policy form could expose Jennifer to legal and regulatory risks and may result in consequences for her and her insurance company. Therefore, Jennifer must prioritize compliance with regulatory requirements to protect her clients and maintain her professional reputation. Question 110. Sarah, a resident of Wisconsin, is considering withdrawing funds from her annuity to cover medical expenses. Which of the following statements accurately describes the tax implications of this withdrawal? A. Withdrawals from an annuity are always tax-free for Wisconsin residents. B. Withdrawals from an annuity are subject to income tax and may incur a penalty if taken before age 59.5. C. Withdrawals from an annuity are tax-free if used to cover medical expenses exceeding 10% of adjusted gross income. D. Withdrawals from an annuity are tax-deductible if used to cover medical expenses. Correct answer. B. Withdrawals from an annuity are subject to income tax and may incur a penalty if taken before age 59.5. Explanation. Withdrawals from an annuity in Wisconsin are generally subject to income tax, similar to withdrawals from other types of retirement accounts. Additionally, if Sarah withdraws funds from her annuity before reaching age 59.5, she may incur a 10% early withdrawal penalty imposed by the IRS. However, there are certain exceptions to the penalty for withdrawals used to cover qualifying medical expenses, but income tax will still apply. It's important for Sarah to consider the tax implications and potential penalties before making withdrawals from her annuity to cover medical expenses. Question 111. David, a Wisconsin resident, is planning to take systematic withdrawals from his annuity to supplement his retirement income. Which of the following statements accurately describes the tax treatment of systematic withdrawals? A. Systematic withdrawals from an annuity are tax-free if taken over a period of at least 10 years. B. Systematic withdrawals from an annuity are subject to income tax on the portion representing earnings. C. Systematic withdrawals from an annuity are tax deductible if used for qualified educational expenses. D. Systematic withdrawals from an annuity are not subject to income tax until the annuitant reaches age 70 and a half. Correct answer. B. Systematic withdrawals from an annuity are subject to income tax on the portion representing earnings. Explanation. When David takes systematic withdrawals from his annuity to supplement his retirement income, the portion of the withdrawal representing earnings is subject to income tax. This is because annuities grow tax-deferred, meaning that any earnings within the annuity are not taxed until they are withdrawn. Therefore, when David takes systematic withdrawals, the earnings portion of each withdrawal is taxed as ordinary income in the year it is received. The portion of the withdrawal representing a return of his initial investment, principal, is not subject to income tax since it has already been taxed. It's essential for David to consider the tax implications of systematic withdrawals when planning his retirement income strategy. Question 112. Emily, a Wisconsin resident, inherited an annuity from her deceased relative. Which of the following statements accurately describes the tax treatment of inherited annuities? A. Inherited annuities are tax-free for beneficiaries regardless of the amount inherited. B. Inherited annuities are subject to income tax, but beneficiaries can choose to spread the tax liability over several years. C. Inherited annuities are subject to a one-time inheritance tax at the state level. D. Inherited annuities are only subject to income tax if the beneficiary is a non-resident of Wisconsin. Correct answer. B. Inherited annuities are subject to income tax, but beneficiaries can choose to spread the tax liability over several years. Explanation. In Wisconsin, inherited annuities are generally subject to income tax for beneficiaries. However, beneficiaries have the option to spread the tax liability over several years, depending on the type of annuity and the distribution options available. For example, beneficiaries of inherited qualified annuities may choose to spread the tax liability over their life expectancy, while beneficiaries of inherited non-qualified annuities may have different distribution options. It's important for Emily to consult with a tax advisor to understand the tax implications of the inherited annuity and make informed decisions regarding distributions and tax planning strategies. Question 113. Olivia is interested in purchasing a variable life insurance policy in Wisconsin. What distinguishes variable life insurance from other types of permanent life insurance policies? A. Variable life insurance offers a fixed death benefit and guaranteed cash value growth. B. Policyholders have no control over how their premium payments are invested in variable life insurance. C. Variable life insurance policies provide flexibility in investment options and potential cash value growth. D. Variable life insurance premiums remain constant throughout the policy's lifetime. Correct answer. C. Variable life insurance policies provide flexibility in investment options and potential cash value growth. Explanation. Variable life insurance policies offer policyholders the opportunity to allocate their premium payments into various investment options, such as stocks, bonds, or mutual funds. The cash value of the policy fluctuates based on the performance of these underlying investments, providing the potential for greater growth compared to traditional whole life or universal life policies. However, with the potential for higher returns comes increased risk, as the policy's cash value is subject to market fluctuations. Therefore, variable life insurance policies offer flexibility and the potential for greater cash value growth but also carry investment risk. Question 114. Nathan is considering purchasing a universal life insurance policy in Wisconsin. What feature distinguishes universal life insurance from whole life insurance? A. Whole life insurance policies offer more flexible premium payment options compared to universal life insurance. B. Universal life insurance policies allow policyholders to adjust their death benefit and premium payments over time. C. Whole life insurance policies have a fixed death benefit, whereas universal life insurance provides a death benefit that can fluctuate. D. Universal life insurance policies do not accumulate cash value, unlike whole life insurance. Correct answer. B. Universal life insurance policies allow policyholders to adjust their death benefit and premium payments over time. Explanation. One distinguishing feature of universal life insurance is its flexibility. Unlike whole life insurance, which typically offers fixed premium payments and a fixed death benefit, universal life insurance policies allow policyholders to adjust their premium payments and death benefit amounts over time, within certain limits. Policyholders can increase or decrease their premium payments and may have the option to increase the death benefit, subject to underwriting approval, or decrease it to reduce premiums. This flexibility makes universal life insurance a popular choice for individuals seeking customizable coverage that can adapt to their changing financial needs. Question 115. Which of the following risk assessment tools is commonly used by underwriters to evaluate an applicant's mortality risk for life insurance purposes in Wisconsin? A. Actuarial tables. B. Credit reports. C. Property appraisals. D. Criminal background checks. Correct answer. A. Actuarial tables. Explanation. Actuarial tables, also known as mortality tables, are commonly used by underwriters to assess an applicant's mortality risk for life insurance purposes in Wisconsin. These tables provide statistical data on life expectancy based on factors such as age, gender, and health status. By referencing actuarial tables, underwriters can estimate the likelihood of an individual's death within a certain time frame and determine appropriate premiums for life insurance coverage. While credit reports, property appraisals, and criminal background checks may be used for other types of insurance underwriting, they are not typically relevant for assessing mortality risk in life insurance. Question 116. In Wisconsin, what role do medical exams play in the underwriting process for life insurance policies? A. Medical exams are not required for life insurance policies in Wisconsin. B. Medical exams are only required for applicants over the age of 65. C. Medical exams are optional and only requested in specific cases. D. Medical exams are commonly required for most life insurance policies to assess the applicant's health status. Correct answer. D. Medical exams are commonly required for most life insurance policies to assess the applicant's health status. Explanation. In Wisconsin, as in many states, medical exams are commonly required for most life insurance policies as part of the underwriting process. These exams help underwriters assess the applicant's health status, identify any pre-existing medical conditions, and determine overall insurability. The results of the medical exam, along with other factors such as medical history and lifestyle habits, are used to evaluate the applicant's mortality risk and establish appropriate premiums for coverage. While there may be exceptions for certain types of policies or applicants, medical exams are typically a standard requirement for life insurance underwriting in Wisconsin. Question 117. Which of the following factors is not typically considered by underwriters when assessing an applicant's risk for health insurance coverage in Wisconsin? A. Age. B. Medical history. C. Occupation. D. Credit score. Correct answer. D. Credit score. Explanation. In Wisconsin, as in most states, credit score is not typically considered by underwriters when assessing an applicant's risk for health insurance coverage. Instead, underwriters primarily focus on factors such as age, medical history, and occupation to evaluate an individual's health risk and determine eligibility for coverage. Age is an important factor as it can influence the likelihood of developing certain medical conditions. Medical history provides insight into an applicant's pre-existing conditions and overall health status. Occupation may impact health risk due to job-related factors. While credit score may be relevant for other types of insurance, such as property and casualty insurance, it is generally not a factor in health insurance underwriting. Question 118. In Wisconsin, what is a common requirement for the activation of benefits under a long-term care insurance rider? A. The insured must reach a certain age threshold. B. The insured must provide proof of employment history. C. The insured must demonstrate a need for assistance with activities of daily living. D. The insured must have a specified number of dependents. Correct answer: C. The insured must demonstrate a need for assistance with activities of daily living. Explanation: in Wisconsin, as in many other states, a common requirement for the activation of benefits under a long-term care insurance rider is that the insured must demonstrate a need for assistance with activities of daily living, ADLs. These activities typically include tasks such as bathing, dressing, eating, toileting, transferring, and maintaining continence. Insurers may require the insured to undergo an assessment by a healthcare professional to determine eligibility for benefits based on the inability to perform a certain number of ADLs independently. Question 119. What role does inflation protection play in a long-term care insurance rider in Wisconsin? A. It adjusts the premium rates annually based on the Consumer Price Index. B. It ensures that the policy's benefits keep pace with the rising cost of long-term care services. C. It limits the maximum amount of benefits payable under the rider. D. It provides coverage for medical expenses incurred outside of the United States. Correct answer: B. It ensures that the policy's benefits keep pace with the rising cost of long-term care services. Explanation: in Wisconsin, inflation protection is an essential feature of a long-term care insurance rider. It helps ensure that the policy's benefits keep pace with the rising cost of long-term care services over time. By incorporating inflation protection, policyholders can maintain the purchasing power of their benefits, allowing them to access adequate coverage for future long-term care needs despite inflationary pressures on healthcare costs. Question 120. What is a potential drawback of relying solely on a long-term care insurance rider for coverage in Wisconsin? A. Limited availability of care providers willing to accept insurance payments. B. Requirement for the insured to undergo a medical examination prior to activation of benefits. C. Risk of exhausting the policy's death benefit if long-term care expenses exceed coverage limits. D. Inability to access benefits until a waiting period has elapsed. Correct answer: C. Risk of exhausting the policy's death benefit if long-term care expenses exceed coverage limits. Explanation: while a long-term care insurance rider offers valuable coverage for long-term care expenses, one potential drawback in Wisconsin is the risk of exhausting the policy's death benefit if long-term care expenses exceed the coverage limits. Unlike standalone long-term care insurance policies that typically offer higher coverage limits and may have separate pools of benefits, riders are often funded by the death benefit of the underlying life insurance policy. If the insured requires extensive or prolonged long-term care, there is a possibility that the death benefit may be depleted, leaving fewer or no funds available for beneficiaries upon the insured's death. Therefore, it is important for policyholders to carefully consider their long-term care needs and explore supplemental coverage options to mitigate this risk.